so she winged it.
It was so bad and so cringe, and my expectation was literally nothing. I was like, I'm gonna put this video up, a couple of my friends are gonna watch it, probably make fun of me, and that's gonna be the end of this. The second and third video came from, wait, 70 people watched my first one, can I get 80 to watch the next one?
She kept creating, she kept posting, and the viewers kept coming. Lily had found an audience.
A lot of the comments were, oh my God, there's a brown girl on YouTube.
More specifically, Indian. Lily's parents immigrated to Canada from India, and Lily was born and raised in Scarborough, near Toronto.
My home life was awesome. My parents, even though I portrayed them to be quite strict in my videos.
Oi, Lily, where the rest of your skirt, huh? I teach you like this, to walk around like this, showing everything to everyone?
They actually aren't like that at all. They're pretty modern and pretty cool.
Your dress is short. Don't know what for.
And were pretty lenient with me. I mean, I got away with a lot of things. I was a brat. I was a brat.
She had a different idea of what she wanted out of life than other kids. In a grade school graduation slideshow, her classmates said they wanted to be lawyers and doctors.
And then I came up and I was like, rapper.
Making out with your friends, man. But then you say that you hate hoes.
I could just feel my parents being like, why?
Because that's just not something women really did in the Singh family.
I know there was a ton of people that weren't happy about my birth being a female, so I think, and that's some real-ish, but it's a real thing. The best thing I could have done to prove to so many people that didn't want my mom to have a daughter was to become Superwoman.
What up, everyone? It's your girl, Superwoman.
It was the name of Lily's favorite hip-hop song by Lil Mo featuring Fabulous.
I love the song so much because it was one of the only songs at the time that was an empowering female song, where Lil Mo's going on about, like, I will save guys with my superpowers, and I will save girls with my superpowers, and I am the Superwoman. I thought, this name that I've had for so long that empowered me when I was younger, I'm gonna make this my screen name. Maybe this should be a new series.
Superwoman didn't just burst onto the scene overnight with a viral video. It was a steady climb fueled by hard work.
The moment that I thought this is going somewhere and this could be a career was the first time I performed internationally. It was in India. And it was the first time where I was truly across the world and people knew my videos.
Singh has transformed herself from a bratty kid to an internet personality to a media mogul. She starred in a feature film, A Trip to Unicorn Island, in 2016. And her book, How to Be a Boss, hit the New York Times bestseller list in 2017 while she was on a 30-city international tour. Lily started out with the goal of getting millions of subscribers and financial security.
Hurry the hell up.
But after surpassing those goals, success has new meaning.
I've really come to terms with the fact that my definition of success is what's the best legacy I can leave behind. And it's not the number of views and the number of subscribers. It is the number of people that can say, this girl changed my life or changed something in my life positively.
CTE is often found in the brains of deceased athletes, military veterans, and others with a history of repetitive brain trauma. Hundreds have donated their brains to the VA Boston University Concussion Legacy Foundation Brain Bank.
This is a former NFL player who died in his early 70s, and this is a veteran who also died in his early 70s.
Dr. Ann McKee dissects these brains.
The hippocampus and the mammillary bodies are very important for memory. I can see that they're slightly affected.
McKee recently dissected the brain of former New England Patriots player Aaron Hernandez, who was convicted of murder and later committed suicide.
You'll see right away that the brain is showing signs of shrinkage. You can see the crevices in the brain that you can't see in the normal.
McKee says Hernandez's severe case of CTE impacted his decision-making, depression, and ability to control rage and aggression. Right now, she thinks we're underestimating how many people have CTE.
We were able to distinguish between CTE and controls and CTE and Alzheimer's disease. The next question is, can we do this in the blood, and can we do this in living people? And we aren't there yet with those answers.
But the need for a diagnosis in the living is motivating companies such as Quanterix in Lexington, Massachusetts, to work faster on technology that could diagnose concussions and CTE in as few as 30 minutes. Kevin Rosovsky is the CEO.
It's like a high-powered microscope. And so by doing that, we can see little biomarkers that you couldn't see before in the blood.
Quanterix received a grant from the NFL and just went public. Since then, its stock is up more than 40%. The company sells a machine called Simoa for $175,000 to other biotechs, hospitals, and researchers.
And for the first time in history, we're able to see brain health in blood, and that's a major breakthrough, and that's leading to less invasive testing, and we've already been able to see evidence of concussions, and there's the beginning evidence of being able to see the accumulated effect of concussions.
Quanterix is also trying to detect Alzheimer's disease, multiple sclerosis, and ALS. Rosovsky says he thinks diagnosing concussions will be easier than diagnosing CTE.
Diagnosing CT in the living probably is a couple years away. We're real excited to see the progress, but reducing some of that work into actual tests in a laboratory takes time. There's regulatory approvals. There's a lot of red tape that you have to go through.
Also in this race to diagnose CTE in the blood are Athlon Medical and Exosome Sciences. And New York's Mount Sinai Hospital is scanning for the disease in the living. But it's just one step in a series of questions for those with serious head trauma. There's still no cure for CTE.
Even if we had a great idea for a treatment, there's no way to test whether it's effective or not. So that's the enormous advance that we'll get if we can develop a biomarker for this disease.
In Boston, Ann Mostu, Bloomberg News.
Wine is a $300 billion global industry where one person's opinion can make fortunes or break them. That's because of this man, Robert Parker, and his newsletter, The Wine Advocate. For 3 decades, he dominated as the world's most influential wine critic. Now Parker's protege is building an empire of his own. Antonio Galloni runs Venice.
Antonio, tell me, what are you trying to build at Venice?
Well, at Venice, we started with the idea in 2013 of building a world-class platform. We have a database of about 250,000 professionally written reviews. On Delectable, we have 7 million user reviews. Through Delectable, we also have a partnership with Whole Foods and several other partnerships that we can't announce just yet. And when you put that all together, what we have is something that no other company in our space can even come close to.
Do you think of yourself as the next Parker?
Not at all.
Why?
Because Steve Jobs said you can't live your life trying to be somebody else. So he's one of my biggest influences, and I've never wanted to be a replica of somebody else because a replica is never as good as the original. Bob is a genius, fantastic, one of a kind. We're going to be something completely different, and I have no desire to be some version of somebody else.
Different in what way?
Every decision that I've made at this company is completely anathemic to what Bob did with his company. I want our writers to be partners. All of my senior people are locked into the company. They all have equity or they have a path to equity based on business results. That's something that we never had at Parker. Our benefits are world-class, and everything that we've done at Venice is completely different from that model. When Steve Tanzer, who is the most experienced active wine critic in America, wants to work with us, that says something. When Alessandro Masnaghetti, who's the best cartographer of vineyards, wants to work with us, that says something. When Neil Martin, who's a superstar wine critic with enormous experience in Bordeaux and Burgundy and the former lead critic at The Advocate, wants to come and be part of our team, that says something.
You make it sound like The Wine Advocate was a disaster as a company and a miserable experience as an employee.
No, it was great because I got to work with Bob Parker when he was at his prime, and Bob was like a second father to me, and we talked on the phone all the time, and he gave me great advice.
Can anyone's palate dominate the wine criticism business the way Parker's did? And should anyone's palate dominate it the way his did?
I just think the world is very different today. It's just a totally different world. It's probably not healthy to have a single person dominating the world.
It's not even wine criticism, it's the wine industry.
Yeah, that's probably not the healthiest thing in the world. But I think that there's just such an opportunity right now with social media and technology to reach such a massive number of people that I think it's possible that 1 or 2 people will actually have more influence than Bob Parker did, because they will, again, this goes back to your first question, not trying to be a version of somebody else. You see this in sports all the time. It's like, oh, well, nobody will ever beat this record. And then somebody comes along, it's like tennis, Pete Sampras. Nobody's ever going to win as many Grand Slams. Now you have 2 guys who are ahead of that and 1 knocking on the door. And so I think a lot like that.
You're a former investment banker. How does that inform and influence what you're doing and what you've done?
My generation has had to deal with a lot more challenges. That's why I think we're actually much better poised for the future. My first job in finance, the first thing that happened was long-term capital, 1998. Then the tech bubble melted down. Then there was a mutual fund trading scandal. That was all like within about 5 or 6 years. And these are the things that I had to deal with as a young executive. My peers who were 20 years older didn't know how to manage in crisis. They'd only seen Black Monday. They'd just been in a big bull market. It's very different. So I'm very lucky. People of my generation or a little bit younger have actually had to deal with a lot more crises. I think that's actually good for learning how to cope with challenges in business.
From the outside, it kind of looks like you're trying to demolish the house that Parker built, right? You left The Wine Advocate.
Yeah.
You merged with one of his chief rivals.
Yeah.
And you just hired his successor, Neil Martin.
Mm-hmm.
So are you?
I think what that says is that all the best people want to work at our company, and that's really what we strive to create starting in 2013. We wanted to create a world-class company that would attract the best-in-class talent, and not just on the content side, on the technology side, on the digital side, our office, and at every level, what we're trying to, we only hire superstars, and we're looking for those superstars.
In the world of professional wrestling, there's something called a swerve.
Hulk Hogan has betrayed WCW.
Some examples. These tag team partners are called babyfaces, or the good guys. Then one of them swerves when he super kicks his tag team partner in the head, quickly assuming the role of the bad guy, or what the wrestling world calls the heel.
Are you kidding? What a despicable act that was!
Or a match is almost lost when, what's that? The superstar wrestler appears out of nowhere sprinting down the aisle to save the match.
That's the Warriors music! It's the Ultimate Warrior!
That's a swerve. So it should go as no surprise that World Wrestling Entertainment, known as the WWE, the most popular brand of sports entertainment in the world, is prepared for any swerves that come their way. So here's the story of how the WWE learned to see the swerve coming. So I spoke to Bloomberg reporters Felix Gillette.
I'm a writer for Bloomberg News for the global business team.
And Kim Basine.
And I'm the U.S. luxury reporter at Bloomberg.
To find out exactly how the WWE is positioning itself for an all-out global invasion, which starts with a massive change to their lucrative pay-per-view model.
WWE basically pioneered the pay-per-view model on cable. I remember as a kid, when the pay-per-view events came up, all of our friends would scramble around and try and get one of the parents to pay for it.
But in 2014, they took a huge risk.
They saw a little bit sooner than some of the other entertainment brands that where this whole thing was moving was away from cable and satellite television and towards on-demand streaming video apps. They made this risky decision, in essence, cannibalizing that pay-per-view model, which they had essentially built.
And after some early turbulence, it's working. Roughly 1.5 million people are paying $9.99 a month for the WWE app, making it the 5th most popular streaming OTT service. This adapt-or-die approach is in the WWE's DNA. Over the past 30 years, the company always seems to think 2 steps ahead. In the early 90s,
WWE was at its most threatened when Ted Turner took them on with WCW,
which stands for World Championship Wrestling. And back then, the WCW was winning the ratings war. So in order to compete with them,
WWE had changed its product from a family-friendly kind of cartoonish style to this really raw. That's why they called their show Raw. It was this raw style of wrestling.
With violent, outrageous, reality-inspired plot lines and aggressive personas.
From a 16-foot ladder!
And they won that fight against Ted Turner. And they bought WCW.
The early 2000s ushered in an era of testosterone-driven programming aimed at the red-blooded American male.
Bra and panties matches, and people smash each other over their head with like barbed wire bats and things like that.
Until 2015, when WWE fans started a hashtag #GiveDivas a Chance. Since then, WWE has hired 40 more female wrestlers, and that growing cast of female characters was part of a much larger plan.
They started to try to appeal to a broader set of people.
Let's attract more female fans. And after we've attracted more female fans, let's attract more international fans. They're broadening their base, and they're doing that in large part to make it more advertising friendly.
And not just friendly to advertisers.
They're trying to build up their fan base in China. They're trying to build up their fan base in Europe. They, already have a pretty good fan base in India.
India is a place where they already have an established wrestling culture.
Because of the gigantic Indian wrestler, the Great Khali. But there's still a lot of work to do. While the WWE set a revenue record in 2017, only 30% of it is coming from an overseas audience. And there's one person whose responsibility is to grow that number.
The buck eventually stops at Vince McMahon, no matter what's happening within WWE.
Yeah, he's a very controlling guy, and it's a very, very, very tightly scripted company.
And that goes all the way down the board to big stars' entrance music. And their outfits and things like that.
So with a CEO like McMahon always planning 2 moves ahead and an aggressive push into multiple international markets, a big issue is money.
It's hard to do all those things simultaneously without committing a huge amount of capital to it.
And that's where the WWE becomes an attractive company for buyers.
Potentially, one thing that could happen with WWE is they could benefit by being acquired by a bigger technology or telecom company, an Amazon or Facebook Paramount or a 21st Century Fox.
So with a market cap of $2.8 billion, the advantage of owning 100% of their own content, and a rapid consolidation spreading throughout the entertainment industry, it looks like the WWE is well positioned, even if there are swerves.
Thank you very much for coming here.
Thanks for having me.
I've always been relieved ever since you were appointed, because at least until your appointment, I seem to have the most unpronounceable name. But now we will keep it as Dara and John. This conference is called The Year Ahead, but in your case, you are close to 6 months into the job. And I wondered what you saw in terms of the year ahead at Uber as your biggest challenge. What's the thing that you think about most when it comes to 2018?
We definitely have our share of challenges at Uber. And for me, where I want to get Uber to the year ahead is a year of normalcy. 2017 was, I think, will go down as one of the most difficult years for any company out there. And I have to give credit to the Uber team and the employees there. It is a group of true believers who believe in our mission, who believe in mobility as a service being available to consumers everywhere at a reasonable cost. And what my job in 2018 is to get rid of the distractions and get the company back to business, get the company back to normalcy. There's a lot that we've done in the past 6 months as far as bringing in new investors, driving a new culture and norms where doing the right thing, period, comes first, bringing a new management team, et cetera. There's a lot that we've gotten done, but this is a company that knows how to execute. This is a service. Mobility as a service is something that's universal, that's needed in the world, and I just want to get back to doing business.
It's quite interesting. You said true believers.
Yeah.
Normally, true believers are the last possible people where you're able to change a culture. Can you explain a bit about that?
Well, I think that they understand that mobility as a service, bringing the cost of transportation down, making transportation services available to anyone and everyone on a local basis, and partnering with cities to be a solution to traffic, to pollution, et cetera. That is a mission that they all believe in. And I think that they, having seen what happened in 2017, to some extent the crisis, the enormous crisis that the company has gone through, is a benefit because everybody at the company knows now that we need to change, that we need to break with the past as far as the way the company was run. We need to go from growth at any cost to responsible growth and growth in partnership with other players out there. That's clear, but now I've got to kind of get the company down to the normalcy of execution, of building great technology, and I think we're going to get there. It's still some tough sledding early on, but I absolutely think we're going to get there.
When you talk about execution, is profits one of the things you want to get? I think you lost $4 billion last year.
Well, profits,
peanuts by the standards of
profits would help. So at some point, we absolutely have to become profitable, and that's part of the plan.
Do you have a kind of goal for that? Do you think you should be profitable by 2022 or by 2020?
I think that we'll be profitable before 2022. This is the business itself.
Do you want to come back a bit closer, 2020?
Yeah, listen, it's not going to, I don't want to name a specific year, but this is a business that the core business, the ride-sharing business, can be profitable within 3 years. We will continue to make very aggressive investments in building out autonomy because we think that's a terrific opportunity for building out new technologies such as Uber Elevate, where near-term profitability is not a goal, but long-term growth is. So we will look to balance near-term profitability, but as a company, we will always be a company that makes big, bold bets and takes big risks.
To what extent, though, do you think that drive to become profitable fights against a little bit of this culture change? If you want to make, you talked about making money, but not at all costs. Do those two things spar against each other?
I don't think that profitability and culture are their issue. It's the company in the past was willing to make trade-offs as it related to how it did business, and I think was guilty of hubris, was guilty of thinking that they knew better than others, and I think that what we know now clearly is that breakneck growth can hide cultural issues, that there are no excuses for not doing the right thing, and that you do have to make trade-offs. And as a management team, we're specifically talking about those trade-offs that you have to make. We have to be a little more patient sometimes because working with governments, regulators, et cetera, sometimes takes longer, but in the end, you build a more lasting business. And so maybe what we went through was necessary, but we're here. We can control our actions from this moment onwards, and I think everyone at Uber from this moment onwards wants to build a great company, not only in terms of growth, but in terms of the kind of company anyone would want to work at.
Can I ask you one thing which you have got a sort of hangover from last year, which is all the regulatory problems, and particularly all the cases against you? I think there are 6 criminal probes or whatever going on.
The lawyers are lining up outside the door.
Which one do you sort of think? Which one do you fear most? I suppose out of these different things.
Listen, I think that all of them are serious issues, and my response is that we're going to be transparent and we're going to take responsibility for our actions in the past. I do think that there are certain circumstances where there was smoke but no fire, and I think as a company we have to defend ourselves and work within kind of the appropriate frameworks. And my goal is just to get beyond this stuff.
But some of these things like pricing policies, surely they go right to the heart of what Uber is, or am I wrong about that?
Yeah, I think they do, but I think that there's a way of being smart but transparent at the same time, and that's where we've got to take the company.
Take me through governments. When you talk to governments privately, do they talk any differently than they do publicly?
Governments?
Yes, governments.
I think that they are honestly a bit relieved with how we are engaging with them, because I think that the engagement is now real. I think they feel like we're out there, we're genuine because we've learned our lessons of the past, and I do think that we can take, for example, the data that we have in terms of traffic and in terms of movement of our drivers and riders, and we can use that data to partner up with cities in order to solve congestion issues, because congestion doesn't help anyone. It wastes enormous amounts of time for consumers. It hurts the environment. And I think that we are aligned with cities, for example, to partner with them in a fundamental way to solve these problems. And I do think that when these are conversations that a number of regulators and cities have wanted to have with us for many years, and I think we are really engaging with them at a depth that I think is going to create a real win-win going forward.
Do you think you were too confrontational on this before?
Yeah, I do. I think that the company was pushing growth. And listen, any innovator, to some extent, the innovation is about questioning past kind of present practices. It's about breaking things, the Facebook breaking things. We just went a step and a half too far. And what I want to keep, hopefully, is the best of both worlds, which is this spirit of innovation, the spirit of can-do, et cetera, but the responsibility of partnership. We don't know better than you. We're actually going to work with you, of actually having dialogue and respect for our city partners, for regulators, and then continuing to take risks and continuing to do daring things. And I think we can accomplish that.
Imagine this audience here is a collection of mayors or a collection of city officials, and you want to depict, this is the Year Ahead conference, depict what the years ahead in this thing are going to be like. How far is driverless cars going to go? You talked just a few days ago about the idea of there being flying cars in 10 years' time. Can you just give a description of what you think transport is going to look like?
Well, I think that we think there are three keys to transport and where the industry is going: autonomous, electric, and shared. And I think all three are necessary in order to get to the next level of city planning, et cetera. There are many cities where up to a fifth of the space taken in these cities is taken by parking and storing these cars. And so I do think that you need autonomous, you need electric, and you need shared. And I do think it's going to take some time. True autonomy for every single use case is some ways away. What we bring to bear is our developing autonomy, and we will have autonomous cars on the road, I believe, within the next 18 months, not as a kind of a test case, but as a real case out there. And over a period of time, we're going to bring autonomous transportation and feather it in with the non-autonomous transportation with drivers.
What does feathering in mean?
Feathering in means
to a layman like
feathering
me? Crashing.
Yeah, feathering in means if you're, for example, in Phoenix, and you make a request to go from A to B, which is what you do with Uber, there will be 95% of cases where we may not have everything mapped perfectly, or the weather may not be the right weather, or there may be an accident on the road, or you may not have 2 or 3 ways of getting from A to B, where you may say, you know what, that's not an autonomous use case. We're going to send a driver to pick that person up. For 5% of cases, everything is going to fall into place. And we will send an autonomous car. The user will be able to pick, do you want, there's an autonomous car, yes or no? And we'll be able to service that A for B. That 5% is going to go to 10 and 15 and 20 as our computers and our algorithms learn more and more about what it takes to drive in a city in a real life situation. And every minute of every day, that driver, that computer is going to get better and know Phoenix better and better and better. And in 5 years, we'll have the perfect driver in Phoenix. We will have to retrain that driver in every single city. We're going to have to build out 3D maps of these cities. And it will take time, but over a period of time, you essentially have a driver who becomes the perfect driver. It'll take 10 to 15 years, but that's the feathering in that I'm talking about.
Will a child born today, will they ever need to learn how to drive?
A child born today? No, I don't think so.
So within sort of 20 years from now, we will...
I don't think so. Listen, I hear some groans.
And also,
I heard a couple of groans. 1.3 million people die from car crashes every year. 1.3 million people die from car crashes every year. That doesn't count an estimated 20 to 50 million people that are injured. Okay, this is actually a public safety issue. If you look at cars, 96% of cars, 96% of time, cars are sitting there not being used. It is a huge amount of pollution that's caused by these cars being in the road, and a huge amount of wasted time. So the safety is there. Electrification is absolutely key, and sharing these platforms is going to allow us to be much safer and also put our assets where they add value.
But it's quite interesting because when you first came in, I remember you sounding somewhat more skeptical about self-driving cars. You've been converted. Is that a?
The choir has spoken, and I'm listening. It's pretty exciting technology out there. But again, it will be a hybrid technology for some period of time.
What about flying cars? That came as a slight surprise.
Yes, that's a great project that we're working on. It's called Uber Elevate. And it is actually about battery technology.
It would have helped a lot of people here.
I know. I wish that I was available. We'll launch it here if we can. But battery technology is allowing us to have multiple rotors on planes, or helicopters, if you want to call them that. These rotors that are much smaller will be much quieter than helicopters are. Much quieter, much safer. If you add sharing into the equation, you can actually get the economics of going from A to B. We think within 5 to 7 years to a place where normal people would think about taking these flying cars. That'll be the beginning, and then it's about scaling. And we're working with a number of partners right now.
Do you think the regulation on flying cars, I've heard some proponents of it argue that it might be easier than it has been on driverless cars, because driverless cars, you have to deal with existing roads, existing everything. Flying cars, essentially, you're going into unconquered space.
I think that mayors that are forward-thinking understand that traffic and pollution are a real issue, and I think flying cars can be a significant solution to traffic issues in cities. And these cars, to start with, they're going to be very specific. They'll be kind of highways in the air. There'll be very specific routes that these flying cars go on. They're not going to be able to take you to your backyard and land in your backyard. There'll be these skyports. So there'll be very specific routes that you go on. And I think if you build a regulatory framework that has that kind of structure around it, I think you get to a better solve.
Can I drag you back, somewhat reluctantly, back to the real world? But you have Rajiv Misra, who came in with you from SoftBank.
Yes.
He's going to become a director. Last week, he said that Uber should focus on repairing its market share in the US and on key European markets, rather than going to new ones. Do you agree with that? Is that the way you look at Uber?
I think one of the fundamental strengths of Uber is the global scope that we have. This is
you
a brand.
had that motto, everywhere. What's it? Everywhere for everyone.
Yeah, everywhere for everyone.
Do you want to make it some places for some people?
No, we like the everywhere for everyone. It's much sexier than some places for some people. That's
telling me.
Just not interesting. I do think seriously though that the global scope that our company brings is important. Our being able to build technology that we can amortize essentially everywhere in the world is hard, but it is part of the fundamental value that we introduce. So I would look at Uber very much as a global brand. That said, we're going to look at all opportunities, but at this point, we are leaning forward. In 2018, for us, is going to be very much a lean forward year for the company.
But without, I'm not trying to create new boardroom tension at Uber, but that would appear that SoftBank is keener on a more limited idea, whilst you're keener on everywhere for everyone.
Well, listen, SoftBank is a very important shareholder. They're our largest shareholder, and many of our shareholders have opinions over what's the right thing to do. Ultimately, the governance of the company is going to be at the board, and we'll have those discussions at the board, and we'll set our long-term strategy and then execute on it.
One of the things which Uber played, perhaps not very fortunately, a role in was the whole sexual harassment questions and everything to do with that. I suppose one very obvious question, do you think that you have solved that part of the culture? But secondly, do you think that this is a real revolution and it's going to stick?
I think that what was happening at Uber was serious, and I think that while what Uber went through was difficult, I think the Susan Fowler blog was probably one of the best things that happened for Uber, and it certainly started a movement that's an incredibly important movement of the company. I'd be reticent to say that it's solved.
Yeah.
But it's not an endemic issue within the culture of the company, and I think the company has learned, and I think the company took very harsh and appropriate steps to make sure that that kind of behavior is absolutely clear, that kind of behavior is not accepted in any way, shape, or form of the company, regardless of where you are, regardless of if you're a great performer or not. So I think we're at the right place for Uber as a company, but I think in general, we're not where we need to be in terms of women in senior positions, making sure that we're welcoming of women in technology, and we help women really build their careers within our company. There's a great kind of bottoms-up energy there, but we're not where we need to be, and we have a lot of work ahead of us.
On the issue of, you talked about the top performers, is that looking back, and also I suppose looking forward for many of the people in this room, because there are a lot of people's businesses which have been affected by this. If you had to give lessons to other people who are now looking at this issue, perhaps more seriously than they have done before, is the really bad issue, and I suppose I'm thinking some ways about the media industry in this, is that giving top performers more room for maneuver or whatever than people, or more discretion than people thought? Is that top performers need to be treated the same as everybody else?
I think they absolutely need to be held accountable. One of the really valuable lessons that I got early in my life was actually through Jack Welch, and he said, it's very tempting to allow top performers to misbehave in any way, but for me, he was talking about being aligned with the CEO. Sometimes you allow top performers. The tendency is, well, let them get away with some kind of behavior that is not the right behavior because they're so good. And what Jack told me very early on is that it's the top performers who are problematic culturally that are the most dangerous because they have followership within the company because people look up to them. So he's like the dumb person who is bad culturally. He's not the problem because everyone says, well, that's a dumb person, so who cares? It's the smart person who has followership, so it is incredibly important for the top performers to actually be held to account more radically than anyone else because they're the ones who have followership at the company, and they have to set the example. So for me personally, that has absolutely guided how I've managed. Expedia was a company that had, excellent cultural values, and one of the first things we did at Uber was to go out and reset our cultural values, and we call them norms because to me, it's not just these values that you put on the wall and kind of people stare at and it's all nice. It's about behavior, and we set out to change behavior at Uber, and I think that the company was thirsting for it, and we are starting on a path, and I believe it's going to be a positive path.
An inevitable question, I hope you won't regard it as a cheap shot, but you talked about smart people who have followers throughout a company. I mean, Travis would seem to be the epitome of that sort of figure. Do you think of him as being in that category of people that Jack Welch was talking about?
I think, listen, Travis was the CEO of the company, and he had incredible followership, and he was held to account, right? I mean, he's no longer the CEO of the company, and he's a board member. He's a big investor, and so he's absolutely going to play a part on the board. But we've also been very clear as a company that we do have to make a break with the past, with how we behaved as a company. And to some extent, with the new CEO being a very different kind of a CEO. So in the end, you have to be held accountable, and I think that Travis was held accountable, and at this point, he's a board member and a constructive one at that.
If you look around the world now, where do you see the next competitors to Uber? You've obviously got Lyft breathing down your neck.
Yes.
Where else do they come from?
Well, I think that as you move into a world of autonomy, the position of the car manufacturers, the position of, for example, Google, who's developing Waymo and Waymo autonomous technology, you're going to get a lot of players interested in the space. And a lot of people think about Uber and ride sharing as a significant enterprise, and it is. But the fact is that we account for less than 1% of miles driven on the road now. When autonomy comes in, that number over the next 10 years is going to be closer, I believe, to 15 to 20%. So because we're not yet a true alternative to car ownership, and I believe that as you bring autonomous and you bring the price of mobility down and make it available to everybody, everywhere, then we become a real alternative to car ownership, and that really opens up the market for us, but it also opens us up to many more competitors.
And is Google at the forefront of those competitors at the moment?
Google is one of many. I think that they've developed very strong autonomous technology, but what we think, which is exceptional, is having autonomous technology and the network under one roof, which allows us to use autonomous in a very practical way, nearer than you think.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Jason Kelly on Bloomberg Radio.
Live from New York and New Jersey, streaming on YouTube. It is Thursday, September 23rd, 2020. And Jason Kelly, we're calling it the Mnuchin Bounce.
Yeah, I feel like we have to work on that a little bit. It's like Mnuchin move. Like, what is it? Like,
I like Mnuchin bounce. I don't know what we have to work on.
It's like Mnuchin bounce. Like, thinking about him like doing like a bankhead bounce sort of situation makes me a little uncomfortable.
If you're scratching your head, we're going to explain what this is about.
We're going to explain what it's about. He essentially moved the market today because there is renewed maybe enthusiasm that maybe there will be some fiscal stimulus coming. Go figure.
Go figure, man. All right. We got a lot to talk about. We're talking politics. We're talking the election outcome. We're talking virus. Don't go anywhere because we've got a packed show over the next 4 hours. Let's get you going, though, and let's talk about that Mnuchin bounce with our own Charlie Belling.
I thank you very much. It sticks, at least for today. S&P rebounding on a news report that Treasury Secretary Steven Mnuchin plans to restart negotiations on government aid after he said that a targeted pandemic relief package is, quote, still needed. S&P now up by 32. We're off session highs, still a 1% gain in the S&P. The Dow up 246. That's a gain of 0.9%. NASDAQ up 121, higher by 1.1%. 10 years up 132nd with a yield of 0.66%. Gold up 0.6%, 1873 the ounce. And West Texas Intermediate crude up 0.9%, $40.29 the ounce. Again, a $40 the barrel on crude, 40.30 right now on WTI. Again, recapping here, stocks moving higher with the S&P up 30, up 0.9. I'm Charlie Pelham. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You're listening to Bloomberg Business Week. Jason Kelly and Carol Masser. Masser? How do you pronounce it? Is it Masser?
Masser.
Masser, thank you.
How long have we been working together?
A long time.
Is that Kalila?
Khalid.
Khalid.
Anyway, let's move on to setting the
Jasoon?
business week agenda. The Mnuchin bounce, the Mnuchin move, whatever we're going to call it. It feels like a little bit of a, you think, sort of trade in the sense of maybe getting some stimulus pumped into this economy. Dave Wilson is with us, stocks editor for Bloomberg, author of the chart and the stock of the day, and Michael McKee, international economics and policy correspondent. He is with Bloomberg. He is in our Bloomberg Interactive Broker studio. Michael, I want to start with you because I feel like, when we were going to talk to you today, we were going to talk about some jobless claims, and obviously that's a number that is important, but this whole notion that Steve Mnuchin, the Treasury Secretary, making some comments that does feel like it's what the market wanted to hear, right?
Yeah, that's a good way of putting it. It's where what the market wanted to hear. It doesn't necessarily mean it's going to happen. I sat through the whole hearing today, at which he and Jerome Powell, the Fed chairman, were speaking to the Senate Banking Committee, and he was asked, is there any chance you're going to continue? And he said, well, I've spoken to the Speaker of the House, Nancy Pelosi, many times in the past few days over the continuing resolution to fund the government, and we've agreed to talk again about the CARES Act. Well, agreed to talk again doesn't mean we have a date, we have a time, we're actually going to do it. And the one thing the market seems to be overlooking here is that Mr. Mnuchin has had his wings clipped since the last CARES Act was negotiated. And Mark Meadows, the president's chief of staff, who is very anti-spending a lot of money, has been sort of the lead negotiator. So just because the market wishes doesn't mean it's going to really happen. We'll have to keep an eye on it.
So Dave Wilson, we are going to watch the market, and we are. Come on in on what you're seeing in the trade today.
Fairly broad-based advance at the moment. What's notable is that commodity producers are at the forefront of the gains, and that sort of fits with the economic theme. Beyond that, technology stocks. How many times have we said that they've been market leaders, and they certainly jump out in today's trading? And it's a case where, early on, we saw the S&P 500 get down to a 10% drop from its peak earlier this month. Typical correction, at least as it's sort of informally defined, and then you saw things kind of bounce back. And
it's called the algorithm kicking in.
Yeah, absolutely. And what you might call a little bit of Mnuchin mania, how's that?
Mm-hmm.
Kind of having its effect on stocks, no question here.
Well, it's interesting. If I look at those 11 major industry groups, everything is up, and except for healthcare, which is down about 0.25%, but it's broad-based in terms of the rally. Mike, are we right to be enthusiastic when you look at the economic outlook right now? Because we're still in a recession, right?
Oh, yeah.
Big time.
The National Bureau of Economic Research, which is the adjudicator of recessions, has refused to make a decision on whether it's over or not because they want to see more data because we're still way below where we were. The question is, how fast do we get there? And not only did Powell and other members of the Fed this week say that we're still going to be growing more slowly than we should be, they also suggested we need more fiscal help. So there's the pressure is on Congress. The question is, can they squeeze in any kind of negotiations and come up with a package that anybody will agree to, given the Supreme Court fight ahead? That's kind of sucking the oxygen out of Washington at this point. And for them to go ahead and do something that either side perceives the other one might gain from this close to an election, kind of hard to see.
Yeah. What do you make of the jobless claims number, Mike?
Well, there's been a lot of criticism among economists in recent weeks about the jobless claims numbers because there's a feeling they don't match up very well with the employment numbers. Right. Today we saw the headline claims number rise, but we saw continuing claims fall, pandemic claims fall. California has suspended its collection or its acceptance of new jobless claims for a couple of weeks to try to sort out how much fraud there might be in the system. So maybe take a look at the magnitude and the change. The fact that they went up a little bit is not particularly good news. And the market did trade off before Mnuchin's comments on that news. But I wouldn't put too much stock in the actual number itself, except to say it's still really big.
Yeah, just a reminder, right, that we still have a long ways to go. Quick tease, Dave Wilson, of your chart of the day.
Boy, companies have been piling up cash this year. So the question is, what happens to it once things start to improve? Barclays is saying, look for payouts, don't look for capital spending.
Or maybe pay your workers more in general.
I'm telling you what Barclays said, Carol. I am not the capital allocator here.
Take it up with Barclays, Carol. All right, Dave Wilson, thank you so much.
You look
Stock
like
Senator.
a capital allocator, Dave.
You've allocated some capital in your time. All right, Dave Wilson, Stock Senator for Bloomberg, back with us with the aforementioned chart and stock of the day. Later on, our thanks as well to Michael McKee, back home in our Bloomberg Interactive Broker Studio, international economics and policy correspondent. He sat through the hearing, so you don't have to, folks. That's how good Michael McKee is to us. Let's quickly do the Bloomberg Business Week Bite of the Day, and then I want to talk about what's coming up on the show. The number that tells us a lot today, Carol, 2.5%.
That's right. COVID and online classes are putting off college students. Undergraduate enrollments dropped 2.5% for the current academic year, according to data from the National Student Clearinghouse Research Center. The steepest decline was among international undergrads, down 11.2%. Community colleges were the hardest hit with a decline of 8%. The only gain was at graduate schools. I saw some numbers at Harvard, I think, for the incoming class that was even higher than that. We were talking about this at dinner last night.
The international number, I would argue, is the most important number of all of those, because down 11.2%, there is a huge amount of revenue that is associated with that population, because they tend to pay full freight. They tend to pay a higher full freight in many cases, and universities and colleges really rely on students coming in from abroad to help fund what are ultimately very, very expensive institutions.
Yeah, absolutely. Listen, it's an important financial base for these institutions. It's also important in terms of diversity for the student population. This is something they like to do.
And one would argue for the company,
Yeah.
for the country, excuse me, you know, in terms of like bringing skilled labor in.
Yeah, absolutely. Hey, coming up, we're going to talk politics with Bloomberg contributor Rick Davis, former Republican strategist, former manager of Senator John McCain's presidential campaign. I want to see what he has to say about John McCain's widow endorsing Joe Biden. So we'll get into that. We're going to talk sustainability with the individual who's in charge of it all over at ABN Bev.
We are indeed. And then sports and fitness. First Sports, although it's going to be later in the show, the CEO of Orange Theory, Dave Long, he'll be along to talk to us about what's going to happen as we think about working out outside the home. And Joe Nocera, we're going to talk college sports. I just love talking to that guy.
Yeah, I do too. And we've got lots to talk to him about sports and the world at large. All right, speaking of the world at large, let's get a check on world and national news headlines with Nancy Lyons in D.C. Hey, Nance.
Hey, Carol. Still no progress to report on a fourth coronavirus stimulus package, even though both Republicans and Democrats say more relief is needed. Today, in a Senate hearing, Treasury Secretary Steven Mnuchin said the administration is also on board.
I believe a targeted package is still needed, and the administration is ready to reach a bipartisan agreement.
Democrats say they're hopeful stimulus negotiations will resume soon. President Trump and First Lady Melania today paid their respects to the late Justice Ruth Bader Ginsburg at the Supreme Court. They made an appearance wearing masks, but they were greeted by boos and chants of "Vote him out." The president plans to announce his nomination for Ginsburg's seat this Saturday. Senate Republicans hope to seat a new justice before the election, potentially cementing the court's conservative majority for a generation. President Trump yesterday refused to commit to a peaceful transfer of power following the November election, but Republican lawmakers are vowing any transition will occur without disruption. House Minority Leader Kevin McCarthy.
There will be a smooth transition, and I believe President Trump will have a very good inaugural, and we will reunite this nation instead of radicalize this nation.
House Speaker Nancy Pelosi says it's sad that the president is even raising the question, calling him a rogue president who makes ridiculous statements. Global news 24 hours a day, on air and on Bloomberg Quick Take. Powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nance, thanks so much. You are listening to Bloomberg Business Week. Jason Kelly and Carol Massar here with you on a Thursday afternoon. And while we keep a very close watch on the numbers here in the United States, we take it down a level to look at the state numbers, the local city numbers, especially in the big cities around the country. We also are keeping an eye on what's happening in Europe, and especially in the UK. It is worrisome because a superlative we did not want to see happened today in data, which is the UK registering the highest number of cases since the beginning of the pandemic, which explains a lot about why the Prime Minister and a lot of companies in the UK are making decisions to lock it down.
Yeah, the medical director at Public Health England saying the milestone is a stark warning for us all. The signals are clear. Positivity rates are rising across all age groups, and we're continuing to see spikes in rates of admissions to hospital and critical care. Listen, this is when it starts to get out of hand, and this is why I think there's so much nervousness once again within the global community as well as the financial markets. Because, listen, Jason, we've been talking about it the last couple months about the expectations for a second wave, and so this feels like it could potentially be the beginning of it. Especially, listen, if you have communities that are not necessarily wearing masks or engaging in social distancing, all the medical professionals have said this is what's going to happen.
Right. And I think a second wave and discussions of a second wave have felt very academic up until this point and not really realistic. And we as humans have a tendency to not really deal with something unless it's right in front of us. And even then, sometimes we don't deal with it.
Yeah.
But this is a case where the data are clear. And so we have to be conscious of what we're seeing. And we have to be conscious of what we're seeing around the world. This time around, we have seen this movie before. We have to learn from what's happening elsewhere. We have to.
We have now a bit of a playbook.
Yeah.
We get it. We know where this goes. So a troubling story, no doubt, on this Thursday. You're listening to Bloomberg Business Week, and this is Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We begin with a headline from the Bloomberg Professional Service. France's daily coronavirus cases have jumped to a record 16,096. This after the UK reported the most new coronavirus cases since the pandemic started. Stocks are climbing on speculation that talks about a new round of economic stimulus will resume amid growing concern over a resurgence in coronavirus cases around the world. We're off session highs, still green on the screen. An up day here with the S&P up 28 now at 3265, up 0.9%. The Dow is up 223 points, up 0.8%. Nasdaq is up 109, higher by 1%. 10 years up 132nd with a yield of 0.66%. Gold up 0.4%. 1870 the ounce, and West Texas Intermediate crude up 1%, $40.30 a barrel. Recapping, stocks higher, S&P rebounding on a news report that Treasury Secretary Steven Mnuchin plans to restart negotiations on government aid. I'm Charlie Pellet. That's a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, we've been giving you some updates about the virus. Clearly, it is of concern to investors. It's of concern to the people who run colleges and companies and all of us just as human beings. So let's check in, get the latest with Dr. Shelley Hearn, director of the Johns Hopkins Center for Public Health Advocacy, part of the Johns Hopkins Bloomberg School of Public Health. Of course, the Johns Hopkins Bloomberg School of Public Health is supported by Mike Bloomberg, founder of Bloomberg Philanthropies and founder of Bloomberg LP, the owner of this radio station. She joins us on the phone from Charleston, South Carolina. I love Charleston, South Carolina.
It's gorgeous.
So I'm going to start there. Dr. Hearn, tell us what life is like down there, because anytime we're talking to somebody outside of our little bubble, as it were, we want to know what's going on.
Well, we all have our bubbles all around the world, but Charleston, you can always count on good food and lovely people. So it's not a bad bubble.
It's not a bad bubble, but let's talk about it. I have some family down in South Carolina, just outside Charleston, and I know the numbers have been tough in terms of the virus.
Well, South Carolina is still struggling. As you are tracking around the country, we are seeing different surges, different improvements in places, and it really kind of boils down to how seriously people are taking public health measures. And unfortunately, just like variations in food from the south to the north, we're also seeing variations in the acceptance of mask wearing, the care with social distancing. And so that's what's going to keep this virus alive and well around the country is if we get complacent and put our guard down, it will return.
Well, can I just a follow? I mean, you are so involved in terms of understanding health in cities and communities. Jason and I kid that there's, one thing, wear a mask. That's one thing we see repeat over and over. But there's also that idea of, taking care of your community. I mean, this is largely what this virus is about. That's why you wear a mask.
It is. I mean, we're hoping for vaccines. We're looking for other kinds of therapeutics. But the real important element is even if those come on board, the absolute best thing we can do for our families and for our neighbors and our entire kind of economic thrivability is to really practice these basics in public health. It may not be sexy, but that's actually what's going to make the biggest difference. And if we all did this together and did it, universally, we could probably really dampen this down, get ready for a tough winter, and do much better. I worry so much about our economy that if we focus in on just stemming and suppressing this virus by community measures, it's what's really going to help open up our ability for strong, healthy commerce down the road.
So, Dr. Hearn, talk to us about the public health system because, Carol and I have talked on this program a lot about this notion that the virus has served to accelerate so many things for good and bad. It has forced us to deal with some things that maybe we didn't want to deal with, and now we have to. And especially when you pair it with what we've seen in terms of a real reckoning around systemic racism and some of the deep, deep inequality, some of the great chasms that we've seen. And having spent a lot of time in South Carolina, having grown up in the South, I know that a lot of that is so apparent there in your state. And even what do we need to do at this moment where we do have something of an opportunity to start to close that gap when it comes to public health?
Well, it's a brilliant question. It is the exact one that we need to focus on. So just like, a healthy company needs good roads, it needs good education systems so that the workforce is ready and prepared for the job. We actually need to have that same kind of capacity in our public health system. These are, and the good thing of the pandemic is bringing alive, you need to have epidemiologists, you need to have labs. This is every day. It's not just when a virus is spreading, but we use those tools all the time to keep us healthy and well and actually thriving in terms of wellness and longevity in life. And that comes down to a public health system that can do that disease tracking, laboratories, the strong staff, and we've actually been cutting those very core foundations in the last 10 years. This isn't something new.
Right.
It's been an equal opportunity neglect over the last few years. And Jason, just to your point, we never modernized this back, from really 50 years ago. Yeah. And if we're going to throw a bunch of money, which we absolutely need to do, into fixing the public health, don't just fix it for COVID, fix it for what is actually killing us and creating one of the least healthy nations in the country. Focus on chronic diseases also. It's the same infrastructure, those epidemiologists, the disease tracking, the laboratories. You design it for the full picture, including you strengthen those agencies like CDC so that they have the authority to deal with what are some of those underlying causes, which in a lot of cases is economic. It is the financial stresses that some of the undergirding of why people aren't eating healthy or don't have safe roads to travel on that's causing us to be the least healthy, wealthy nation.
Which is just staggering. But this whole idea of infrastructure makes so much sense. We're going to continue with Dr. Shelley Hearn. She's director of the Johns Hopkins Center for Public Health Advocacy at Johns Hopkins Bloomberg School of Public Health. She's joining us from Charleston, South Carolina. So Jason will continue that conversation.
The least healthy, wealthy nation. That is going to stick with me. That's a really, really important and scary way to put it. This is.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 106.1. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, coming up, we are going to continue our conversation with Dr. Shelley Hearn from the Johns Hopkins Center for Public Health Advocacy. A really important conversation because we have this moment where we can make changes, Carol.
Yeah, absolutely. Fingers crossed that we actually get it right and learn from this crisis. All right, we'll get back to that in just a moment. Let's get a check on your top business stories, another check on that trading day. Where are we, Charlie?
We are well off session highs, green on the screen, but it is an up day on Wall Street. Do want to begin with a couple of headlines. Atlanta Fed President Raphael Bostic says racism, quote, drags us down economically. His remark came while speaking about banking and the economy. And in sports, Florida prosecutors have dropped a misdemeanor charge against New England Patriots owner Robert Kraft after courts blocked their use of video that allegedly showed him paying for sex at a massage parlor. Stocks are higher on speculation that talks about a new round of economic stimulus will resume amid growing concern over a resurgence in coronavirus cases around the world. France's daily coronavirus cases jumping to a record. Also, the UK reporting the most coronavirus cases since the pandemic started. The S&P up 23, now up 0.7%. The Dow's up 182, up 0.7. NASDAQ up 87, a gain there of 0.8. 10 years up 1/32 with a yield of 0.66%. Gold up 0.2%, 18.67 the ounce. And West Texas Intermediate crude up 0.8%, $40.24 a barrel. Medical experts say they are making progress in treating coronavirus, and that's helping bring the death rate down, even as researchers continue to work on a vaccine. Dr. Jason Farley is a nursing professor at Johns Hopkins Bloomberg School of Public Health. He was interviewed this morning on Bloomberg Television.
So I think there are a lot of great positives we've learned. I certainly, I agree with Fauci saying that we are still at too high rates of new cases, around 40,000, and certainly would like to see those numbers go further down, as well as the mortality continue to decline.
Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. United Airlines will offer on-the-spot coronavirus testing to customers flying to Hawaii who are willing to pay $250 to avoid a 2-week quarantine on arrival. UAL shares, they're lower today by 0.7%. Recapping equities higher, S&P up 24, up 0.8%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Charlie, they're highlighting another member, a great member of the Johns Hopkins team, and we've got one with us right now, Dr. Shelley Hearn, director of the Johns Hopkins Center for Public Health Advocacy at the Johns Hopkins Bloomberg School of Public Health. Of course, the Bloomberg School of Public Health, supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. She is on the phone from Charleston, South Carolina. So, Dr. Hearn, we were talking about the importance of really reworking, updating, improving, bringing to the 21st century, our infrastructure, our healthcare infrastructure. Having said that, did our infrastructure fail us, not just the physical infrastructure, but the political infrastructure in the nation's capital?
So what I will say is that we have failed public health for decades now. It's actually been a relatively nonpartisan issue of equal opportunity neglect. We put a lot of money into investigating therapeutics for diseases, but we don't put the money into understanding what causes those diseases in the first place and how we can best create a healthier nation. If public health's doing its job right and is positioned right, we're keeping people out of the sick care system. We're keeping out of hospitals, out of doctors' offices, out of spiraling pharmaceutical costs. It's one of the best bangs for the buck, but we haven't really done the proper investments with that kind of mindset the way that other countries have, and that's what we've neglected.
So, Dr. Hearn, as we look ahead and we seek to seize this moment where, as you rightly pointed out earlier in the conversation, we're going to spend a lot of money. We're going to direct a lot of resources toward public health. What's the first place, generally speaking, that a hospital administrator should be looking toward? You talked about those chronic diseases and treatment thereof, but how do we spend the money correctly to start to tackle this? What's the low-hanging fruit here, if there is any?
You bet. So here's what we need to do. We have health departments, which are actually our frontline defense, and we rarely talk about them because if they're doing their job, you don't see them. And those health departments need to be invested in, not just for COVID response, because we've had these things before. We've had SARS, we've had anthrax, we throw money at it, we do a little tiny fix, and then Mother Nature or terrorism or someone throws us a curveball and we just fix that little, we kind of strapped on a Band-Aid instead of, how about a disease surveillance system that tracks the health of respiratory diseases? So whether it's COVID or asthma, which is one of the #1 causes of hospitalization, lost school days, absenteeism, but we actually don't even track that nationally. We don't have the proper basics. What's the health of the community? Where are our big problems? When we see a spike, go in and investigate, catch it early. Whether it's chronic or a short-term infectious outbreak, we could do such a better job if we would just do that core investment in the public health system, not the healthcare system.
What's your hope that that happens?
I do, and actually, here's the silver lining. The business community has really gotten it, that they have been hurt, they've suffered, they've each had to, we've got some of the companies that are creating their own contact tracing forces. That's a government job, that's a government responsibility, but we didn't have enough staff in place. We don't have the proper numbers. We've been cutting year after year after year. And when I think that you'll see some of the top leaders stepping up and saying, sure, we can do contact tracing, but it's not our core competency. It's just like good roads, just like good school systems. We got to have a good public health system that keeps things operating. That's not our job, but we need to be out there advocating that we build those systems right in the first place so that we're all healthier, wealthier, and well.
All right, we're going to leave it there. Really enjoyed talking to you. Come back and visit with us, please. Dr. Shelley Hearn, Director of the Johns Hopkins Center for Public Health Advocacy and the Johns Hopkins Bloomberg School of Public Health. She joined us on the phone from Charleston, South Carolina, a terrific city.
It's a great city. Been there. I told you I've got a bunch of family there. It's interesting. I think it's such an important perspective. As she said, we have failed public health for decades. This is not a Democratic, Republican, fault. But this whole idea of fixing our infrastructure, I totally agree with her. And that whole idea of keeping people,
healthy,
out of the healthcare system. We have got to get on board with that already.
Yeah, something's got to give there. Something's got to give, and hopefully we'll wake up to it. So our thanks to Dr. Shelley Hearn. Let's get down to Washington now. Nancy Lyons is there. She's got world and national headlines.
Hey, Jason. FBI Director Christopher Wray says the agency has not seen historically any kind of coordinated national voter fraud effort in a major election, whether by mail or otherwise. President Trump has claimed that mail-in voting will rig the election. As for election security, Wray told senators today,
we're working closely with our federal, state, and local partners, as well as the private sector, to share information, bolster security, and identify and disrupt any threats.
He says foreign interference in our elections will not be tolerated. Postmaster General Louis DeJoy is asking a judge to amend an order forcing the return of high-speed mail sorting machines that were taken out of service this summer. In a court filing, DeJoy says the machines cannot be put back in service since they were stripped for parts to improve or repair other machines. More than a dozen states allege that the machines were taken out of service to undermine the election. A suspect has been taken into custody in connection with the shooting of 2 police officers last night in Louisville, Kentucky. The incidents happened during protests over the decision not to directly file charges in the death of Breonna Taylor during a raid at her home. Louisville Mayor Greg Fisher says one officer has been released from the hospital. The other is expected to recover. He says an FBI investigation is underway, and he's urging calm.
Violence will only be a source of pain, not a cure for pain. And we know that violence is never the answer.
Officials also say a curfew remains in effect for the next 2 nights. Global news 24 hours a day, on air and on Bloomberg Quick Take. Powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nancy, thank you so much. You are listening to Bloomberg Business Week. Jason Kelly, Carol Massar here with you on a Thursday afternoon. And, you know, this was something that actually came up in a conversation in the drive to the close we had yesterday with the wealth manager over at UBS.
Told you we've been reporting on this.
I know. Yeah, you went big on that.
But it's important. Like, it's important. Like, because look at how much we covered the big bank CEOs putting pressure kind of on their employees and everybody, like, get back to work. Well, let's talk about this story.
Yeah, I mean, here's the reason why. Hannah Levitt doing some great reporting, a story we've been following closely here at Bloomberg News. Just ask Carol Massar. Basically, you have banks who are reliant. Their business is reliant on a robust, shall we say, commercial property market. So that means they need workers who are working in big office towers to get back to the city so that those companies continue to pay rent and they don't flee the city. And that may be the reason, as you play this out, that some of those banks are saying, could you come back to work, please?
Yeah, well, check this out. And this specifically gets into, I think, some of the regional banks, but New York Community Bancorp mortgages. So we're talking about, corporate mortgages make up more than 90% of the loan portfolio, about $39 billion of financing as of mid-year, mostly tied to real estate in the New York City area. Signature Bank says more than 60% of its loan book is secured by commercial real estate. Compare that with Wells Fargo. Loans in New York State accounted for just 2%. So, you got to watch which financials we're talking about, but that's big exposure.
It's huge exposure. And, if you are a company that says, all right, I'm going to stay in New York City, but I'm only going to need about half my space that I had before because people are going to be working from home or hybrid or whatever it is, you sort of add all that up in a market as big as New York City, and you're talking about a real shift in demand where there is a lot of supply, to say the least. We'll keep following this. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Viacom CBS, the media giant that owns MTV, Nickelodeon, and the CBS network, has cleared CEO Bob Bakish of wrongdoing following an investigation of alleged sexual harassment. Shares of Viacom CBS, they're up now by 0.3%. The Dow, the S&P, NASDAQ off session highs. Stocks have paired gains after a report showing a resurgence in coronavirus cases in Europe. Tempered optimism about a potential new round of stimulus talks. The S&P holding on to a 25-point gain, up now by 0.8%. The Dow's up 180 points, up 0.7. NASDAQ up 98. That is a gain of 0.9%. 10 years up 1/32 with a yield of 0.66%. Gold up 0.3%. 18.67 the ounce, and West Texas Intermediate crude up 0.7% at $40.22 a barrel. Recapping, equities higher off session highs with the S&P up 23, up 0.7%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening to Bloomberg Business Week. Jason Kelly and Carol Masser here with you on a Thursday afternoon. And I have to say, this is one of these stories that people I barely know are emailing and texting me about, because it is just that good and really speaks to something that may have been missed or uncovered or undercovered in this whole sort of economic carnage. And that's the term that this writer uses in his story. Talking about Ben Steverman, one of our favorites, a go-to guy when it comes to really understanding the personal aspect of economics. He joins us on the phone. We're also joined, of course, by Bloomberg Business Week editor Joel Weber. Joel, set this up for us. I love this story.
So we started talking about this one a couple months ago because we just felt that the character that Ben read about, who's at Harvard, his name's Raj Chetty, was one of all the people that we were wondering what he was going to be doing during the pandemic. He was one name that we just really wanted to know about. And so we talked to Ben because Ben has done some amazing coverage sort of in this space before. And when we put them together, some magic happened, and that ended up being this story that's in our equality issue. And I'll let Ben speak to it more closely, but basically Mr. Chetty and his team of about 40 people at Harvard have tried to get a God's eye view of data during the pandemic. And the tool that they have assembled is basically, I think, unparalleled in presenting just how real the carnage is. And on that note, I'll turn it over to Ben. Ben, how bad is it based on the data that Raj and company are assembling?
Yeah, so they pulled together all this private data from all these companies, which has never been done on this scale before. And you can really see down to the neighborhood level, and you can see these neighborhoods, especially wealthier neighborhoods, where wealthier people live, that is. You can see what's happening to small businesses. What's happened to small businesses in March and April is like they're down 70% in terms of sales. Some neighborhoods in Midtown Manhattan, you've got 80, 90%. The sales are down. And the tracker is able to then kind of track that. Okay, the dollars aren't coming into the small businesses, so that's then what's happening to the workers. And you see the employment rate for lower income people really fall. So these are the people that do your nails and pour you beers and serve you food at restaurants. All these people have been at unemployed. But you can also see in this tracker that moment when those stimulus checks arrives. It's a day by day, week by week, state by state, neighborhood by neighborhood tracker. So you can really see that, like the precise moment when those checks arrive, and you can see spending by lower income people really increase. But the thing is, a lot of them were spending money online, not in person. And a lot of wealthy people, or wealthier people, just the top 25% or so, are staying home, and they're not spending still, 6 months into this thing.
I got to say, Ben, one of the things that we talked about on our morning planning call today when we knew we were going to do this story, and I should point out it's been among the most read on the Bloomberg from the get-go on this Thursday, but our producer Paul Brennan pointed out there's a line in your story, the American dream is dead. and talking about Chetty's work as he proved with exhaustive government data showing today's workers can no longer expect to earn more than their parents did. I remember my parents. I'm one of 7 kids, 9 people, and it's amazing what my parents did, but they wanted even more for us, and I think we've done that. But it's kind of depressing to think that that's not going to be the case potentially for a lot of generations in our country right now, and a lot of people in our country.
Totally, and the reality is really awful. But the way that he's been able to show these things is really interesting to me. This is a big data. He's basically using big data, and that's really revolutionized economics in the last 10 years or so, because he doesn't have to build a theory or a model for what's happening. He can actually dive into these huge data sets of tax data, census data, and see individual people and see what's happening to them over their lives as they grow up and have careers and retire. And he's been able to he's really proving that what's happened over the last, say, 40 years to the American dream. He's also shown the barriers that really exist for Black Americans, even privileged Black Americans, in terms of being able to match their parents' incomes. And so you can see racism, you can see education and how great educations can really help people. A great teacher can really have a huge impact on someone's career. So that was his background before he went over and dropped everything and started studying the pandemic. But it's one using these giant data sets to really prove the reality out there and really pay attention to the places where we're falling short as a country.
And one of the ways that he's able to build this tool is obviously it's all about the inputs, right? And the data that he's able to get. And that's also, you mentioned this earlier, Ben, that's what makes this tracker so unbelievably effective, is that he's got all these sources of data that he can basically aggregate that have never been sort of assembled in this way before. How did he go about getting that, and why was anybody willing to give it to him?
It's a great question, because this idea of, he's basically been using private data, right? He's been using MasterCard is giving him data, Intuit, a bunch of other companies. Some of them you maybe haven't heard of, but there are a lot of different companies that have really interesting proprietary private data. But the challenge is, getting them to hand that over. And, they're handing over aggregated, anonymized data, so there's not much of a danger of a privacy breach. But one of the reasons he's able to do this is because he has this background using all this IRS and tax, all this tax and other data, government data that's super secret. So he has some credibility from that. But there's also been this moment in the economy where these private businesses, they also want to see us, recover. They also want to see the economy get back on track. So they've been way more willing and open to his approaches. And he's still looking for more data. He's still reaching out to folks, trying to find more data, because he sees this as being sort of the next frontier for economic analysis. And this could really be an awesome tool, not just for studying the national economy, but think about a local problem in your neighborhood, or think about a natural disaster hits a particular state. You could go down and drill in and see where are the places that really need help.
Right.
It's really cool.
No, it's a
and figure out
terrific
the best
story.
policy for any moment, any given moment in time.
And tailor it.
Brilliant.
Yeah, absolutely. It's a terrific piece of reporting. Thank you so much for bringing it to us. Ben Steverman, personal finance editor for Bloomberg. He's back in our Bloomberg Interactive Brokers studio. Sorry, we're not there to greet him in person. Also joined by Joel Weber, the editor of Bloomberg Business Week. One of the quotes that really jumped out at me, Darren Walker from the Ford Foundation, talking about Chetty, he understands that growing inequality asphyxiates hope and makes it impossible for people to dream and believe that their children will have better lives.
Which is just not the way, and not really the culture of what America has been, right? All right, for those of you listening in New York, D.C., and San Francisco, watching on YouTube, Bloomberg Business Week, we're going to continue. If you're listening on Bloomberg 1061 in Boston, Bay State Business is coming up next. And speaking of the economy and what he found, we're going to talk a little bit about U.S. economic data. That's coming up next.
From Bloomberg World Headquarters, I'm Charlie Pellet. We move into the final hour of trading. Stocks well off session highs. Stocks have paired gains after a report showing a resurgence in coronavirus cases in Europe. Tempered optimism about a potential new round of U.S. stimulus talks. Right now, we've got the S&P up by 4 points. That's a gain of 0.1%. The Dow's up 19, up less than 0.1%. NASDAQ is up 27 for the NASDAQ Composite Index. That is a drop now of just about 0.3%. 10 years up 3/32 with a yield of 0.66%. Gold is down 0.1%. 18.62 the ounce, and West Texas Intermediate crude oil is up now by 0.5%, $40.12 a barrel. S&P did retreat from session highs after France and the UK reported another surge in infections, which have prompted tighter restrictions. Well, as for the economic backdrop, Kathy Jones is chief fixed income strategist at Charles Schwab, and she was interviewed this morning on Bloomberg Television.
Well, my biggest fear in the U.S., and now it extends to Europe because of another round of outbreaks of the coronavirus, my biggest concern is we don't get fiscal stimulus, the economy slows down again. Worst case scenario is a double-dip recession. It's not our base case, but it's a worst case scenario.
JP Morgan Chase says it will probably move more bankers from London to continental Europe after some 200 employees were recently told they will need to transfer because of Brexit. This according to the head of the firm's Frankfurt unit, Dorothy Blessing, who spoke in a Bloomberg webinar, saying the relocations announced this month are, quote, a first wave to respond to the prospect of a no-deal Brexit. JP Morgan Chase shares up now by 0.1%. AT&T is extending its media rights deal with Major League Baseball, agreeing to pay a significant premium to continue airing the sport on its cable channel TBS. Shares of AT&T up now by 0.5%. Again, recapping equities higher, holding on to a 6-point gain on the S&P, now up by 0.2%. The Dow well off session highs, up 0.1%, up 27. NASDAQ up by 0.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
You're listening to Bloomberg Business Week with Carol Masser and Jason Kelly on Bloomberg Radio.
All right, let's do a little Business Week economics now. So much to talk about with Yelena Shalecheva, senior U.S. economist for Bloomberg Economics. We got those jobless claims numbers. We've got the Secretary of the Treasury and the Fed chair on Capitol Hill talking about what needs to happen next. And all eyes continue to be, speaking of the Fed, on Jay Powell and his colleagues to try to figure out what sort of models are they using? Are we really looking out so far? What role does inflation play? All of it. She's going to answer every question we have. Yelena Jones is on the phone from Long Island. How are you? There's a lot going on.
Excellent. There's a lot going on, and talking about different stimulus measures, whether from the Fed or from the fiscal authorities, and on top of everything else, what the discussion continues on what inflation will do and whether inflation will trigger some hikes in the future, some hikes from the central bank. So I think let's talk about inflation a little bit and the change in the framework and take a deeper look at that. So we did some research on that recently, and we found out that it will really be up to inflation expectations to define the timing of the next, of the first increase in policy rates, and it will be in a very distant, well, not in a very distant future, or distant future, should I say? Well, not until 2025, our expectations show. So that is when the Fed is estimating the output gap will close. So the output gap did not close until 2018 in the wake of the Great Recession. So it took more than 8 years, basically, to slack to diminish in the economy. So the Fed started hiking rates back in 2015. But if they used the framework that they just decided to go with, they would not have increased rates until 2018. So our expectations are for the Fed to wait until the slack diminishes, until the output gap closes, and only then to start raising rates, and that is not going to happen until 2025, most likely.
God, I cannot even believe 5 years from now. So I don't know. I think about our audience who are listening, who maybe just drove off the road, as a reminder of where Fed policy might sit. But the reminder is too, the Fed can change its mind if something changes in the economy. But what does that mean for investors? What does that mean for the average Joe? What does that mean for the working person? What does that mean for us, Yelena?
So low rates and accommodative policy means a lot for interest rate sensitive sectors such as housing and auto sector, and those have been helped quite a lot by the low level of interest rates. Look at what happened this week with existing home sales and new home sales. They are rising, and they are rising quite robustly. So the housing sector is really benefiting from low interest rates. We saw a significant rebound in auto sales after the dealerships reopened. Right. So these things are really helping, but the Fed cannot go it alone. So it needs help from the fiscal authorities. And there was a lot of discussion on Tuesday and today in a combined testimony from Stephen Mnuchin and Jay Powell about these things. So the focus is now on the next round of the fiscal stimulus, which has to be targeted.
Isn't it kind of funny? Like, it's like.
I mean, don't you imagine that Jay Powell? I'm guessing this is exactly what you're going to say. That Jay Powell's probably sitting there being like, "Yeah, welcome, bro." Like I've been saying this to everybody who would listen for weeks now.
Thanks for reading the memo. Like, it's unbelievable. Even Mnuchin, come on, he knows how this works. And what's interesting is we've got an election. It's the economy, stupid. Like, we know how this works. And the economy, as Mike McKee, reminded us, we're still, in a big time recession. And
Yelena, she just called me stupid. That was
I did not. Come on. No. But it's like we know how this works. And the bad part is this whole concept of community. Like, we need to take care of everybody. It's not just big companies who have access to senators and congressmen.
There's a lot of different divides here. So there's a divide by state, and in that sense, obviously, it's very important what is happening in swing states. And actually, the lead between the two presidential candidates, the gap between them in the polls is very narrow in those swing states. So the next payrolls report is the last one before the election, and we should look at it very closely. And probably more important, on October 20th, not October 2nd when we get the national payrolls report, but October 20th is when we get the state level numbers. So those will be very interesting ahead of the election, because they may define the fate of the presidential election as well as the election into Congress.
All right, Yelena Shlecheva, thank you so much, senior U.S. economist for Bloomberg Economics, indulging us as we do like a little role playing between Jay Powell and Steve Mnuchin. But I mean, listen, I have to think, like, if you could get inside Jay Powell's head, that's got to be what he was thinking.
They walked out of the
Are you kidding me?
They walked out of, Jay Powell walked out with Mnuchin, from the testimony this week, and he's like, buddy.
Yeah, seriously.
I don't know what economy you're looking at, but I've done everything I can do. I can't give checks to Americans.
Right. And he's made that very clear. I mean, I feel like that's come through crystal clear in Jay Powell's press conferences, in the speeches that he's given. Like, he's gone further than probably is comfortable for him in basically terms of saying, here you go, guys. It's your deal. But we also know that Mnuchin and, to a large extent, Chief of Staff Mark Meadows, they are the keys to all of this, because you do have, Democrats who at least say they're willing to act, and they're willing to act maybe on a bigger scale than the Republicans are. But listen, we saw it. Mnuchin moved the market.
So it's the Mnuchin bounce and the Mnuchin memo. I'm just saying.
There you go. Mnuchin mania, as Dave Wilson said. Yelena Shlecheva, thank you again so much, senior U.S. economist for Bloomberg Economics. Carol?
All right, let's get back to World and National News headlines. Back on over to Nancy Lyons in our D.C. studio. Hi, Nancy.
Hey, Carol. Republican lawmakers are promising an orderly presidential transition after President Trump refused to commit to one himself. Bloomberg's Nathan Hager reports. ballots.
After President Trump was asked about it,
we're going to have to see what happens. You know that I've been complaining very strongly about the ballots, and the ballots are a disaster.
Senate Majority Leader Mitch McConnell tweeted, quote, "There will be an orderly transition, just as there has been every 4 years since 1792. Democratic Senator Joe Manchin is urging his Republican colleagues to go further than making promises.
For the sake of our country, for the sake of humanity as we know it, for the sake of our children and future generations, please protect this great republic of ours."
In Washington, I'm Nathan Hager, Bloomberg Radio.
Donald Trump's niece is following up her best-selling tell-all book by filing a lawsuit alleging the president and two of his siblings cheated her out of millions of dollars over several decades while squeezing her out of the family business. Mary Trump is seeking unspecified damages in the lawsuit that was filed in a state court in New York City. A man is in custody after two officers were shot last night in Louisville, Kentucky, following that grand jury's decision to not directly file charges in the death of Breonna Taylor. Louisville Police Chief Robert Schroeder.
Lorenzo Johnson has been charged with 2 counts of assault to first degree and 14 counts of wanton endangerment, all directed against police officers.
One officer was treated and released with a leg wound. Another officer was shot in the abdomen and is recovering from surgery and is said to be doing well. Global news 24 hours a day, on air and on Bloomberg Quick Take. Powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nance, thanks so much. You're listening to Bloomberg Business Week. Well, once you take them apart, you can't just put them back together again.
Come on, anybody knows that.
Everybody knows that, apparently.
Where's the schematic? How do I do this?
It reminds me of a way.
Exactly. How many parts was it? Like 10,000 parts? Or
40,000, I think it was. We have one more finale tonight. Don't say a word, Masser.
I actually haven't
Don't say
watched.
a
I have
word.
2 more to watch. I've kind of been saving
okay.
them.
So I'm ahead of you. Okay.
So
Anyway.
let's talk about this. Postmaster General Louis DeJoy telling a judge that the U.S. Postal Service cannot reassemble the hundreds of high-speed mail sorting machines that were taken apart this year. We just heard a little bit about that in our World of News update. It's a project that more than a dozen states allege was intended to undermine the upcoming election. Yeah.
Yeah, this is not great. I mean,
great.
look, you've got this. You synthesize it with what Nancy just reported in terms of the president saying that, the ballots, quote unquote, are a mess. There is going to be a lot of more mail-in voting because of the pandemic this year. So, folks have raised some concerns that the USPS would not be able to manage it because of some of the measures that were taken. Why and how they were taken remains up for debate. You also have some assurances, not just from Louis DeJoy, but from others, that all these ballots can be processed, but this is at the core of the election debate.
Well,
it's at the core.
And then let's roll into this, a Washington Post story that says internal U.S. Postal Service documents are linking changes behind mail slowdowns to top executives, which is in contrast with agency accounts that lower tier leaders outside of USPS headquarters were mainly responsible for some of the things that were going on and some controversial protocols. So I got to tell you, I don't know.
Sort of reminds me of the phrase, and again, not to be too glib, when they say just because you're paranoid doesn't mean they're not after you.
It's so true.
Like there is an element here that the reporting just keeps coming out, and we got to keep following it and figure out, get to the bottom of it. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. A choppy session, but up right now. We've got 43 minutes to go ahead of the closing bell. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. That's right. U.S. stocks in the green, but off their session highs. Dow's up 67 points, was up 332. S&P's gained 10. NASDAQ climbs by 50. The U.S. 10 yield at 0.66%. Gold is little change. Transports gained 38 points. And among the main 11 SP sectors, leaders were utilities and staples. Only healthcare and energy fell. Leaders to the upside in the Dow, Goldman Sachs, Coca-Cola, and Microsoft, while Boeing and Nike led to the downside. In other news, Amazon said they're partnering with Tesla on a Ring car system. The UK reported the most new virus cases since the pandemic began, and Exact Sciences soared as much as 29% intraday after the CEO talked about the company's multi-cancer screening technology. After earnings, Accenture fell 7%. And wrapping things up, Costco reports after the bell. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much. And we'll be all over Costco when it breaks right around 4:15 Wall Street time to hear live breaking news over your Bloomberg-type squawk, SQUAWK, on your terminal. I'm Charlie Pellet. That's a Bloomberg Business Flash.
All right, Charlie, thanks so much. Well, so much going on in the world of politics. So much going on. So who do we need to turn to, Carol?
Yes.
One guy, Rick Davis, partner at Stone Court Capital, former Republican strategist, and also a Bloomberg contributor. So lucky to have him in the family. He joins us on the phone from Virginia. All right, Rick, 40 days out. I can't imagine that anybody would have predicted this is where we were going to be, but I think you probably could have said that every day for the last few years. What do you make of this moment? And let's start with this notion of a peaceful transfer of power. I can't believe we're talking about this.
Yeah, that's the least likely concern we have for this election. We've had success for 200 and more years of transfer of power, and we won't have that problem this time. I think one of the suggestions that was sent by Republican lawmakers on the Hill today was, we're not going to let there be anything other than a peaceful transition of power. So if, like with Nixon, Senate leaders from your own party have to go to the White House and say, it's time to go, bud, the message I got today was they're prepared to do that.
So you feel better about what, based on what you heard, that the response was strong enough from the Republicans to sort of quiet your mind at least?
Sure. It was swift. They got out there, leadership, McConnell and others, within the news cycle that Trump started this debate. And of course, it's not the first time we've ever heard this from Donald Trump, but certainly it was a little more emphatic this time about not counting ballots. So I think that the leadership in the Senate stood up today and said, this will be an orderly transition. We will not go backwards on our democracy. And I would suspect that that if there is a win for Biden in the general election, the Senate uniformly will stand up and say, let's enter into a transition.
Well, sure, because they've now got potentially control of the Supreme Court.
Well, I think that the Supreme Court decision may be decided long before the election. It may be a de facto confirmation process, right? They're going to speed it up as fast as they can in the committee. And it wouldn't surprise me that they try to have the vote even before the election. Now, almost all of the major legislation that the Senate has is not going to be acted upon until the lame duck. So certainly this could happen too. But they do run the risk in Arizona and Georgia, where those two seats are elections for the Senate are being done to fulfill a vacancy, and those literally could turn over before the end of the month in November. So I don't think they want to run the risk that either one of those flips.
But as a Republican strategist, Rick, I mean, that's the power, right? That the Republicans, conservatives, will largely have potentially control of the Supreme Court by their appointees for decades to come. I mean, that's the power, right?
Well, arguably they do now, right,
yeah.
Carol? I mean,
right. Fair
this
enough.
was always the intent of the Trump administration, but really the quiet work that McConnell's been doing for a long time. I mean,
Right.
you know, he will tell people that his legacy will be a conservative federal bench from the Supreme Court on down. And you've seen the incredible pace with which they've filled vacancies on the federal bench. So really, this is going to be the story for the next 25 years.
So, setting aside the procedural, let's talk about the political side for the Democrats, Rick, because procedurally, they ain't got much. But politically, what's the playbook here?
Well, I think for the Democrats, it's a little dangerous, right? I mean, arguably, there's a case to be made that there was an overreach on Kavanaugh, you know, the last Supreme Court nominee to be put on the court. If you have a majority in the Senate, as the Republicans do, and it's pretty clear with the vote count now that they've got the votes for whoever Donald Trump appoints, and of course, people matter in this case, so that still yet to be seen. If it's going to happen anyway, you got to gauge what you're going to get out of it politically. Right now, arguably, Biden's making progress on Trump's base in the suburbs. Don't screw that up with a big fight on a
fait accompli,
bench.
essentially, right?
Right. And look, a lot of these people who may be considering voting for Biden, who voted for Trump in 2016, may be pro-choice or maybe pro-life. And you're threading the eye of the needle, especially if the nominee to the bench is, you know, one of the nominees who has a strong pro-life record. Would you rather have a president in place or make a case in the next month before the hearing? So I think there's very little to gain. I think there's a base element to this where they've got to look like the Democrats have to look like they've maintained some semblance of base politics, but they're not going to pick up any votes at this stage by putting on a show and trying to hold up a nominee.
Right. All right, Rick Davis, stick with us. We got a couple more questions for you on the other side of the news. Rick Davis, partner for Stone Court Capital, former Republican strategist and Bloomberg contributor. It almost reminds me of like the sports metaphor of like you sort of you go ahead and let the other guy score because you'll have a little bit more time on the clock if you can control the ball.
Yeah, absolutely. That's a really great way of explaining it. And also, Rick, as being the former manager of Senator John McCain, we want to ask him about Cindy McCain's endorsement of Joe Biden, what he makes of that, because she was certainly front and center this past week, talking on all of the major networks about her endorsement of Joe Biden. We're going to continue with Rick Davis. You are listening to Bloomberg Business Week on this Thursday. Had to check what day it was.
I knew it all day because, as you say, our Thursdays, whoa.
All right, this is Bloomberg Radio.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 106.1. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Coming up, we're going to continue our conversation with our pal Rick Davis. A lot to ask him before we let him get on with it, especially about the late Senator John McCain and his widow.
Yeah, exactly. We're going to talk about Cindy McCain's endorsement of Joe Biden. Let's get back, though, to your top business stories. Another check on that trading day, because, Charlie, just about 29 minutes to go.
Indeed, and a turnaround from our last update. Last report, we mentioned that stocks were higher across the board. Not the case right now, negative across the board. 28 minutes to go ahead of the closing bell, with the Dow, the S&P, and NASDAQ all on the minus side. Right now, the S&P is down 6, a drop there of 0.2%. The Dow is down 62, a drop there of 0.2. NASDAQ slumping 19 points, lower by 0.2%. Rising coronavirus cases tempering optimism about a potential new round of stimulus talks. The TV station EW Scripps has agreed to buy Ion Media Networks for $2.65 billion with help from Warren Buffett's Berkshire Hathaway, moving aggressively to expand its footprint in a challenged but still lucrative industry. Scripps shares, they are higher today by 10.1%. After the bell, we'll be hearing from Costco. Investors will focus on profitability, traffic trends, and holiday commentary. Costco shares up now by 0.4%. Rest of the market lower. S&P down 6, down 0.2%. The Dow's down 69 now, down 0.3%. NASDAQ down 23, a drop of 0.2%. 10-year yield 0.66%. Gold little change, down 74 cents the ounce at $18.62. Crude West Texas Intermediate up 0.5%, $40.12 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
It is indeed, Charlie. Thank you so much. We want to get back to our guest, Bloomberg contributor Rick Davis, former Republican strategist, former manager of Senator John McCain's presidential campaign, and of course a partner at Stone Court Capital, still with us on the phone from Virginia. So Rick, let's talk about Cindy McCain, obviously the widow of John McCain. You worked on his presidential campaign. What does it mean that Cindy McCain endorsed Joe Biden?
You know, I think it speaks to two big issues. One, obviously, an advantage for Joe Biden to get such a high-profile Republican family to endorse his candidacy. But two, Cindy was out of politics, right? Since Senator McCain passed away, she has really stayed out of politics. Obviously, with Donald Trump in the White House and sort of his regular, irregular outbursts about Senator McCain even after he passed away, she's kept her thoughts to herself and has not engaged in any kind of political endorsements or responses to President Trump. So she comes at this with no baggage toward the president, but a willingness now to sort of break with the Republican ranks and support Joe Biden, who she's known personally for 40 years.
Mm-hmm. Rick, before we let you go, just one more quick question for you, which is, and you alluded to this earlier, going slightly down ballot into the Senate. You know, these special elections are in Arizona and Georgia specifically. What else should be, are those the key races to watch? What are the key, like, one or two Senate races that we should be watching, given that so much hangs on the Senate now?
Sure. I would say there are probably 7 races right now that would consider toss-ups in the United States Senate. And as you know the math, it's only going to take 4 to flip the Senate, and assuming that the presidency flips and the vice president can break whatever ties that they need to break. But 4 seats flip the Senate no matter who's president. And so with 7 seats up, it's anybody's game. The 2 seats that we discussed in Arizona and Georgia are actually special elections.
Right.
And so their new members, whoever it is, take office as early as the middle to late November. So those are really key ones to watch. And, of course, Georgia, a battleground state, and Arizona, a battleground state, are going to are right now very close, and the presidential campaign could weigh heavy on those races.
Absolutely. All right. Well, we're going to be keeping in close touch with you. 40 days to go. Rick Davis, thank you so much for your time. Partner, Stone Court Capital, former Republican strategist, and of course, a Bloomberg contributor. Carol.
And just want to mention, crossing the Bloomberg, Democratic presidential nominee Joe Biden's search for a Treasury Secretary, widely seen as focusing on Lyle Brainerd of the Federal Reserve. It's a choice that would keep both Wall Street and progressives in line. The more provocative choice of Senator Elizabeth Warren, not ruled out, but far less likely. This is a Bloomberg News scoop. We'll continue to give you more on that story. This is Bloomberg.
Money don't get everything it's true, but what it don't get, I can use one more.
All right. Some money, some Beatles. We talked a little bit about the Beatles yesterday and that big top albums list. Dave Wilson, your chart of the day. Talk to us.
All about money, specifically the cash that U.S. companies have been piling up as they deal with the effects of the coronavirus pandemic. Barclays referred to it in a report yesterday as a substantial war chest of precautionary cash. They also looked at the possibilities in terms of what may happen as things kind of settle out, companies' businesses rebound, and all that cash becomes excess, shall we say. What they suggested is that it's more likely to be used for payouts. We're talking about dividend increases, buybacks of shares, buybacks of debt, and not for capital spending, because companies have been relatively conservative when it comes to CapEx, as it's called, and so that's not likely to change anytime soon. Now, it may take a while to get to the point where companies are comfortable enough that they decide they really don't need the extra cash, but Barclays is sort of laying the groundwork for what may happen down the line as companies go back and try and figure out what's best in terms of their financial situation, in terms of taking care of their shareholders and their business. And if you want to know more, folks, send me an email. I'll get you the chart, the explanation that goes with it, and everything I do going forward. The email address is dwilson@bloomberg.net. That's dwilson@bloomberg.net.
All right, Dave Wilson.
Important part of the marketplace to kind of watch.
Yeah,
think about
for sure.
Absolutely. When you consider the amount of cash held by the S&P 500, and that's what the chart focuses on, up 35% this year on a per-share basis.
And you know the amount of money that Americans, the average American, has on hand right now?
Couple hundred?
Probably not even. I mean, it's just if you think about it. Remember the story we did that if they had an auto bill that was a couple of $100 or $300 or $400, that most Americans wouldn't be able to pay for that. So what a contrast, Dave Wilson. So thank you for bringing that to us. Really appreciate it. But it's
All right,
stark.
we'll catch you on the other side of the close. And man, those U.S. markets, they are gyrating, to say the least. They've been up and down and up and down. Barely, they're all flat at this very second, but I would imagine we may end up negative, just given how it's been trending.
Yeah, and I think there's a lot of, computer trading going on right now. Vince Signorella and I have been kind of messaging back and forth. Like, you can really see how things kind of kick in when I think there was an official correction and then, bouncing off of that. So something to keep an eye on with just about 20 minutes to go, actually, in today's trading day. Let's get back to World and National News headlines. Back on over to Nancy Lyons. Hey, Nance.
Hey, Carol. Treasury Secretary Steven Mnuchin and Federal Reserve Chairman Jay Powell returned to Capitol Hill today to provide the Senate Banking Committee with an update on the economy. Bloomberg's Irv Chapman has more from Washington.
Powell said the trillions of federal dollars Congress pumped into the economy gave it a stronger boost than even he expected, but it requires still more to avert a downturn.
People now are spending even though they're unemployed. They may have saved part of the checks that they got. The risk is that they'll go through that money and have to cut back on spending and maybe lose their home. That is the downside risk of no further action. We don't see much of that yet, but it could well be out there in the not too distant future.
Powell, of necessity, avoided the contention of the composition of the next spending bill, while Mnuchin argued for quick passage of what the White House will agree to. In Washington, Irv Chapman, Bloomberg Radio.
President Trump says he may not transition out of office if he loses the election. He made the comment during a news briefing yesterday. House Speaker Nancy Pelosi has a message for the president.
You are not in North Korea. You are not in Turkey. You are not in Russia, Mr. President. And by the way, you are not in Saudi Arabia. You are in the United States of America. It is a democracy.
Meanwhile, Postmaster General Louis DeJoy is asking for an amendment to an injunction that requires the U.S. Postal Service to reverse operational changes and reassemble high-speed sorting machines. In court filings, DeJoy tells the judge overseeing the case the system cannot reassemble the hundreds of high-speed mail sorting machines because they were stripped of parts. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nancy, thank you so much. You're listening to Bloomberg Business Week. Well, we mentioned it going into Dave Wilson there, but let's talk a little bit more about Lael Brainerd being the top pick, apparently, top of the list right now for a potential Biden presidency in the Treasury Secretary seat. It's a critical job, as we were reminded today, candidly, Carol, because the current Treasury Secretary, Steven Mnuchin, his testimony on Capitol Hill, at least for a few hours, moved the markets. He has, in the way he has constituted his job, a huge voice in negotiating on behalf of the administration. He and Nancy Pelosi have been sort of the key architects of all this.
That's why it's so important. Listen, we have known that when we have moved the needle and gotten these stimulus programs, and if you think about it, they actually got stimulus done fairly quickly as the economy was shutting down and as Americans were just looking at, no jobs, no money coming in and all of that, small businesses, big businesses. But it has been those two individuals, and Steven Mnuchin has been crucial in kind of getting the administration on board to get things done. So you're right, Jason, for him to actually say something like that, that's why you get the markets reacting. But again, it's a big step between he's saying something, Congress actually doing something, especially when, we just talked with Rick Davis. They're busy. Right. They're thinking about the Supreme Court. They want to get that done. That's something that's going to be a Republican legacy for decades to come.
So Lael Brainerd, she would be the first non-white dude to be the Treasury Secretary if, in fact, she was confirmed.
Because she's not a dude to begin with.
Exactly. And interestingly, the more provocative choice, not surprisingly, Senator Elizabeth Warren. She is still in the mix, according to this scoop by Saleha Mosin and Jennifer Epstein. Apparently, Lael Brainerd has told folks she'd sort of like to be Fed chair instead of Treasury Secretary. But Jay Powell is actually in that job until 2022. He can be reappointed by the president, or he could give way.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Straight line up right now for the S&P 500 index. 13 minutes to go ahead of the closing bell. A move higher here. It has been a volatile day. Stocks have been fluctuating, but right now we're looking at a 15-point gain in the S&P 500 index, up by about 0.5%. The Dow's up 95 points now, up 0.4. NASDAQ up 66 for the NASDAQ Composite Index, a gain of 0.6%. NASDAQ 100 Index up by 0.8%. Dow Transports up by 0.4%. 10-year up 2/32 with a yield of 0.66%. We've got gold up 0.2%, 18.67 the ounce, and West Texas Intermediate crude up 0.8%, 40.23 a barrel on WTI. So again, recapping here, equities higher, holding on to gains. A volatile day right now. NASDAQ is up 0.6, the S&P up 0.4, the Dow up 0.3%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
Just drive, baby.
It's the question that drives us.
This is the Drive to the Close
That funky music will drive us till the dawn.
on Bloomberg Radio.
It is time for the drive to the close. Back with us is Charles Lemonides, founder and chief investment officer at the investment manager ValueWorks. They focus on a value discipline, which for a long time has been a tough way to go in this market, but certainly as we've seen some pullbacks, maybe makes it a little bit easier. He joins us on the phone in New York City. Charles, how are you?
We were having a very good time in the markets lately. Thanks very much.
In other words, a pullback happens and you're like, finally.
Well, it's not so much that a pullback happens as finally, but there's been a lot of discernment in where the pullback is happening and how it's happening, and that's probably a little bit overdone, and it's probably about time that happened. And look, we have to expect the markets to be very choppy for the next several months because of where we are in the world.
Right.
And so the where we are in the world, man, I mean, where to begin? Let's start, because we were talking about it earlier in this hour, with the election. This is the sort of thing that normally, sure, we're totally focused on a presidential election with 40 days to go, but with all the headlines coming out, whether it is the president's comments last night and having to be essentially reassured by the Republican majority that no, there will be a peaceful transfer of power, whether it is this notion that we're not going to know the evening of November 3rd or even the morning of November 4th, how much more complicated does it make it, and how does that change your perspective on figuring politics into the equation?
Oh, your point is spot on, because my perspective is that there tends to be a very, very clear pattern around elections that once you know the winner, it doesn't matter if it's which party it's from. Historically, once we've known the winner, the markets have a really strong advance. And look, ultimately, you have to recognize that whatever your political perspective is, 50+% of the people liked and backed the winner. And so 50+% of the people are pretty happy with the outcome. You may not be, but once we have an outcome, it creates a tremendous sense of relief for at least half of the population, and the markets tend to go higher once we have a winner. The funny thing about this particular cycle is that there's a greater possibility this time around because of mail-in voting, not because of anyone's nefarious intent necessarily, but just because of where the world is sort of mechanically. We have to accept that there's a very good chance we won't know the winner, and that creates an uncertainty and a pressure on this market that you're just not sure it's going to be relieved on November 2nd.
So when you look at the market, I mean, our audience really loves to know where people are buying and selling in this market. What are some names that maybe have been all of a sudden new opportunities for you?
I think Goldman Sachs is spot perfect for the type of name that you want to talk about right now. They have a franchise that is super solid, a valuation that is super solid, And they're in the group of financials that have been just unloved for a long time. And they're large enough as a group that they can carry the next leg of a market advance. They won't necessarily, but they sure can. So, and everything else that the company has intact is like sort of, their problems are very much behind them. And then another company in the same vein in terms of large, liquid, well-known, well-capitalized, solid business that is very attractively priced that hasn't participated is Comcast. Their business is going in all the right directions despite what's happening in advertising, which is pretty impressive given that specific headwind. And again, it's the type of company that could provide broad leadership for the next leg of the market advance. And I think while the market's likely to be bumpy over the next couple of months and really, really volatile, I think 6-9 months from now, we're highly likely to be 10 to 25% higher than we are today.
Wow. So, Charles, how do you figure in the big tech names into this conversation? We talk about them all the time, whether it's Apple, Amazon. We're hearing about some new devices today. Tesla, we went back and forth on over the past few days with Battery Day and predictions of a cheaper EV by Elon Musk. How do you sort of figure all that into this market?
Well, it's very, very tricky because it's true that these companies have great market position, great growth potential, really solid business models. The problem is that they are very, very, very fully priced. And the bigger problem is that they may get more fully priced in the months and years ahead. You know, we lived through the late 1990s when companies like this really captured investors' attention, and they should capture investors' attention because they're great companies and great businesses, and they've made people a lot of money up until now. And anyone betting against them up until now has been run over, and then they backed up the bus and run them over again. There's no reason to know, there's no clear way to know when that's going to end. But every month and every quarter that it continues, you're sort of getting closer to Thanksgiving, and you're the turkey. You just don't know when it's going to happen.
That wasn't a bus. That was a Cybertruck.
I was just going to say, Charles, a little dark about the bus and everything. This is an interesting market time, and it's with these big macro issues, whether it's virus, whether it's the elections, there's so much going on. Do you feel like, I don't know, 6 months from now, it's a very different game in the market?
I think it's very, very likely to be very, very different 6 months from now, 9 months from now, maybe 4 months from now. Look, I'm pretty sure the election will be resolved 3 or 4 months from now, not before 6 months from now. And I also think 6 months from now, we'll be in March coming into April, and it's highly likely that the virus situation is much, much better than it is today. Now, who knows what happens with second wave? Maybe it happens, maybe it doesn't. But even, and who knows how bad it gets, but the odds are that we're making huge strides in terms of treating people who get sick.
Yeah, that's true.
Controlling how many people get sick.
Right.
And maybe having a vaccine at some point.
Right.
So that huge overhang, that huge uncertainty is going to be behind, let's hope it's behind us 6 months from now. And 6 months from now is like sort of a short time and sort of a very, very long time. I mean,
right.
Well, considering we've all been home more than 6 months, 6 months at this point.
We're all getting nervous on the downside.
Yeah.
Right, right. Absolutely. Really good to catch up with you. Thank you so much. Charles Lemonides, founder and chief investment officer over at ValueWorks, joining us on the phone from New York City. I do want to emphasize that point that he made, though. That
Which one?
I feel like for a long time it's like vaccine, got to get to a vaccine. And now we're sort of saying, well, maybe there's a vaccine, and there will be at some point, but really, let's just get a handle on this. Let's figure out, wear a mask, social distance, be smart. We can handle this.
Right.
So let's get to it. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pelleton. Up day on Wall Street, the Dow, the S&P, and NASDAQ all advancing. Sound of the closing bell at the New York Stock Exchange. As we wrap up trading on this Thursday, September 24th, folks from Goldman Sachs Asset Management ringing that bell. Stocks whipsawed as investors weighed the chances of a compromise on a new stimulus package amid concern over an uptick in global coronavirus cases. The S&P 500 paired most of its earlier rally after optimism faded that Congress would reach a spending deal with the White House. Stocks surged midday on news that Treasury Secretary Steven Mnuchin and the Democratic House leader are open to fresh talks. The S&P climbed 9 points, up 0.3%. The Dow up 52 points, higher by 0.2%. NASDAQ at the close up 39 points, up by 0.4%. The S&P once again is positive for all of 2020. 10-year up 3/32 with a yield of 0.66%. Gold up 0.3, 18.69 the ounce, and West Texas Intermediate crude up 0.7%, $40.21 a barrel. Charles Lemonides is the founder and chief investment officer at ValueWorks, and moments ago here on Bloomberg Business Week, he talked about all of the uncertainty surrounding the November election.
The funny thing about this particular cycle is that there's a greater possibility this time around because of mail-in voting, not because of anyone's nefarious intent necessarily, just because of where the world is sort of mechanically. You have to accept that there's a very good chance we won't know the winner, and that creates an uncertainty and a pressure on this market that I'm just not sure it's going to be relieved on November 2nd.
Among some of the tech names that advanced today, Tesla up 1.9%. We saw Apple up by 1%, Microsoft up 1.3%, Facebook up by 0.2%. Jefferies Financial Group shares surged 6.8% today after earnings, after reporting better than expected third quarter results. Recapping equities higher, S&P up 9, volatile day up 0.3%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
Your next move will be your last.
Nobody move a muscle.
Damn, Stippy, you got the move.
We're now moving on from town to town.
Time is money. Let's go. Come on, move it.
Shake it up. Shake it up.
Bloomberg Business Week, Movers and Shakers with Carol Masser and Jason Kelly on Bloomberg Radio.
A lot of shaking going on Wall Street on this Thursday. Charlie breaking down those closing numbers. We finished well off our lows of this session, but also off our highs of the day. The Dow alone, about a 550-point swing on the Dow Jones Industrial Average. Big picture, S&P 500, 303 names higher by the close, 198 lower, 4 unchanged. 10 of the 11 major industry groups in the S&P 500 actually higher, although 2 of them, industrials and energy, call it kind of flat on the day. Outperformers, though, Jason, up about 1.2%. Utilities, consumer staples up about 0.8%. So there's your big picture. We also want to bring in Wall Street's, she watches Wall Street, I should say, but she's Bloomberg News cross-asset reporter Sarah Ponczak. Also,
Wall Street's own, Sarah Ponczak.
Wall Street's own. What a title.
It's like, Sarah, you now have another new job.
Yeah, hey, Sarah, you represent all of Wall Street, and you tell us everything that goes on there. So, welcome.
Okay.
Oh, my God. What?
No pressure or anything like that,
How
right?
do you explain today?
You know, it's a difficult day to explain. Like you said, a lot of shaking going on. I mean, boy, were we seeing markets whipsaw today. In the green at one moment, in the red the next moment, then in the green, then in the red. And I was watching small caps all day long, and they could not decide if they wanted to lead this market or if they wanted to lag. Granted, the Russell 2000 small cap index is down about 4 or 5% this week. It's the worst since June, and it has been lagging, which many have seen as a read on the economy, meaning that investors are looking to a fiscal stimulus package that might not pass, rising COVID cases, the fact that the economy might hit a speed bump. But there was really no direct trend. However, I will say, though, that if you look at the sector breakdown of the S&P 500, your top 2 performing sectors, utilities and consumer staples. So 2 classically defensive sectors. At the same time, we did return to FANG and tech outperformance, so tech being that safety trade once again. So even on an up day, there were some signals of defensiveness.
Yeah, it's interesting. But I do feel like every time the market pulls back, especially on those high-flying names, people are like, okay, it's a better entry point.
I'm getting in.
Yeah,
Yeah.
totally.
People are just so conditioned to buy the dip. It's worked for years and years and years. It's difficult for them to fall out of that habit.
Any names that really jump out to you amid all of this?
So one that really jumped out to me, one, because it was the best performer in the S&P 500 today, but just Darden Restaurants. I mean, granted, they did report earnings. Comparable sales did miss, but they did report strong profits, especially compared to what was expected. Shares up more than 8% today. But the reason this really stands out to me is the fact that, I mean, yes, it's a very large restaurant chain with many brands under their belt, including Olive Garden, but throughout the pandemic, the fact that they've been able to surpass expectations and warrant an earnings report that then warranted an 8% rise in share prices is pretty impressive.
Love me some Olive Garden, all the salad and bread you can eat.
All of those breadsticks. Carol can't wait. That's the first place she'll go once restaurants
I have
reopen.
to say, when my dad was older, like it became like a favorite place, and so it was kind of
100%. My late grandfather, Pat Kelly, rest in peace. We were all over the OG. I mean, come on, bring it on.
He just was really sweet. And there was this taste of Italy I used to get. I got a little plant parmesan, a little pasta.
Plus all that salad, the salad and breadsticks.
Carol alone accounts for the 8% rise in share prices today.
There you go.
Well done.
Goldman Sachs was interesting too, I feel like, to watch. And it was a name actually mentioned by Charles Lemonides to us. Is that what you were pointing back to? Were you pointing back to a previous?
Charles is behind me.
Charles is behind you talking about Goldman Sachs. Yeah. I mean, financials. I mean, since you represent all of Wall Street, Sarah, as we pointed out earlier, I mean, financials is a really interesting sort of place right now, given all the various things that are coming to a head, it feels like, in this market.
Right, especially due to the fact that yields right now are just not budging, which feeds into net interest margins. Goldman, like you said, it was the third best performing stock in the S&P 500, up close to 5%. This did come after a report from UBS saying buy Goldman because there may be a lot of volatility this quarter. That is true. If you have a lot of volatility in markets, the idea is that some of these banks will capitalize upon that, and you will see that show up in their trading deliveries and earnings. So that's one thing that might offset at least low yields right now.
I always love when the big banks like make a call on another big bank. I don't know why. I mean, I know they've got to do it. Right?
It's like being a media reporter. You know, it's like, good Lord.
I always think that it's so hard to seem impartial, but you do your absolute best, and you have to be. It's your job.
It's just weird.
All right, Sarah Ponczak, thank you so much. Love catching up with you every day. Let's look at
keeper
volatility.
of all things Wall Street.
Yeah, Wall Street represents all of Wall Street.
It's hers.
Volatility, the VIX down a touch, interestingly enough, down 0.17%, closing at 28.53. It's Bloomberg.
All right, Dave, you're up. Hi, my name is Dave.
Wilson, where are you? Wilson!
Just what do you think you're doing, Dave?
We're going for the price on Wilson.
Open up the door, it's Dave. Who? Dave. Hey, Mr. Wilson!
Hey, Mr. Wilson, Dave Wilson, talk to us about your stock of the day.
Exact Sciences, Jason. It's a cancer screening and testing company that may be best known for the colorectal cancer test Cologuard, based on stool samples rather than colonoscopies. Exact Sciences was founded in 1995. Went public in 2001. The ticker is EXAS. The company shares set a record in July 2019 after soaring more than 26-fold in less than 3.5 years. Since then, not so good. Exact Sciences has been lower for most of 2020, mainly because of a 66% plunge during February and March. Today, though, the shares turned higher for the year on optimism about a potential expansion. Exact Sciences CEO Kevin Conroy appeared at an investor conference and discussed a blood test his company is pursuing. The liquid biopsy test is designed to detect multiple forms of cancer. Conroy unveiled early data that showed the test caught 87% of cancers with a false positive rate of just 5%. Now, the data went over well. Exact Sciences posted its biggest gain since March. The shares climbed almost 27%.
That is mind-blowing if they are able to figure that out.
Yeah, quite a name, quite a description.
Which part? Colorectal?
No.
What?
You know, the stool discussion.
Oh, yeah, I know. Well,
thanks, Dave Wilson.
Hey, Jason.
Talk to you tomorrow.
It's kind of a part of life.
It is. Thank you for pointing that out. I have a baby. Let's go to Ed Baxter now in San Francisco. Hey, Ed.
Oh, you can be tough. Republican congressional leadership is trying to assure a peaceful transfer of power in January. That is what the vote mandates. Senate Majority Leader Mitch McConnell tweeting, the winner of November 3rd election will be inaugurated on January 20th. This is a rebuke to Donald Trump, who repeated again yesterday, we're going to have to see what happens. He went on to say, you know what I've been complaining about very strongly about the ballots, and the ballots are a disaster. But anyway, Mitch McConnell is saying, no, this is all going to go down the way the Constitution says. U.S. authorities are saying today that hackers could slow but not prevent vote counting in the November election. They say it could add to the potential of a chaotic election day, but not invalidate results. House Democrats have started drafting a stimulus proposal of roughly $2.4 trillion. House Speaker Nancy Pelosi says Republicans need to respond now.
We came down $1 trillion in our $3.4 trillion bill. Then we offered to meet the Republicans halfway. We still haven't heard back about that.
The bill could pass the House next week, but there is the Senate then. New York officials are asking for a review of any vaccines approved by the federal government. The city does not have an official role, but Governor Andrew Cuomo says he doesn't trust the federal government anymore, and that the city wants to have an efficacy review before it starts being distributed. And police in Louisville say they do have a suspect taken into custody in connection with the shooting of the 2 police officers there. In San Francisco, where the air is beautiful today, I'm Ed Baxter. This is Bloomberg.
So glad to hear that.
Ed, that's great to hear.
That makes me
I'm very happy to hear about the clean air. And once you scurry back inside, like Carol Massar likes to do, and just like get to the gaming, Amazon now has a streaming service. They're
First of
getting
all,
into the business.
everyone who's listening, that is so not true. Okay.
I love how mad it makes you when I say that. You take umbrage at that like almost nothing else. I could accuse you of so many things. You'd be like, whatever.
Yeah,
But
exactly.
hardcore gamer, you do not resemble that.
It's not my thing. Okay.
But
so let's talk
Amazon,
about this.
I mean, they're getting after it. They're going to go up against Google. They're going to go up against Microsoft, NVIDIA, all of them. And because they all have services, they all have gaming services. Hard to bet against Amazon in anything. This is called Luna Plus. It's going to cost $5.99 a month during the introductory period. And they're going to go after this market.
$150 billion video gaming market, and you can understand why they would like, I'll take even a few percentage points of that, because that's going to certainly contribute to the top and bottom line. So they're talking about a subscription to the Luna Plus channel, about $6 a month, I think you said, during an introductory period. And I guess it'll be bumped up from there. But it's interesting. I guess they had a press event today. They revealed a refreshed lineup of Echo Smart speakers and a flying home video camera, which I'm trying to understand that. Is that like, what is that? I don't know.
Probably
I'm
like
going
a
off.
drone sort of situation.
So a drone
that
for
you
your,
can
like,
use.
Hey, what are the kids doing down in the basement?
Well, it's like, hey, we're having a picnic. Let's get a little like drone action. I'm guessing. I'm not sure it's as much about surveillance, but maybe.
Oh, okay. Sorry that I took it there.
But interesting to think about this gaming platform, because it does seem like you're going to have a battle over content and what's going to be exclusive on which platforms. I mean, we've seen this play out on streaming services that you and I actually use because we're not gamers, in terms of watching movies or shows like our current favorite, Away.
Yes.
So do you start to see some real showdowns here over content? Interesting to watch.
I'm just going to say, Amazon, man, they've been busy.
Yeah.
This is
Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Costco's numbers are out. Shares are lower, down now by 2.6% after our fourth quarter EPS coming in at $3.13. Estimates $2.85. Fourth quarter revenue $53.38. Estimates there $52.46 billion. Bottom line, Costco slumping now by 1.97%. Keeping an eye on Costco for you after hours. The Dow, the S&P, and Nasdaq volatile day today, but stocks did push higher. S&P 500 index up 9. That was a gain of 0.3%. The Dow up 52, higher by 0.2%. Nasdaq up 39, a gain of 0.4%. Stocks were whipsawed as investors weighed the chances of a compromise on a new stimulus package amid concern over an uptick in global coronavirus cases. 10-year yield 0.66%. Gold up 7.66 the ounce, up 0.4%, 18.70 the ounce. And West Texas Intermediate crude up 0.7%, 40.21 a barrel. Recapping stocks higher, Costco lower. I'm Charlie Pellet. That's Bloomberg Business Flash.
All right, Charlie, thanks so much. You are listening to Bloomberg Business Week. Jason Kelly, Carol Massar here with you on a Thursday afternoon. Well, let's check in with Dr. Jeff Welser. He is Vice President of IBM Research, joining us on the phone from California. And, you know, we've been talking about new technologies, new approaches to saving the planet a lot this week. It's Climate Week. Last week was the Green Festival here at Bloomberg. This is very much front of mind. We were talking about it in a podcast that we've been promoting a lot with Jay Lippman over at Ethic yesterday. Jeff, really nice to have you back with us. How are you?
Good. Thanks for having me.
So talk to us about how technology can help here. I mean, you are involved in some really, really cutting-edge stuff there at IBM. Take us into the future, or the present, I guess, because you're doing it.
That's right. So obviously most of our research is focused on making the next generation of computing technologies, quantum computing, AI, high-performance computing. But once a year, we like to step back and think about how these might impact things at a more societal level. And this year, we're really focusing on how we can supercharge the discovery of new materials in science that will help us create a more sustainable future just across the board.
Well, let's talk about them, these specific 5 core areas, because I think this is important. As Jason said, we've been having a lot of conversations. I talked with the head of IKEA. I mean, sustainability has been in their culture from day one. So everybody's looking at, you know, so many different ways to reduce their imprint or footprint, I should say, on the environment and just do things in a better way. What are those 5 core areas that you guys are looking to kind of enable a more sustainable future, Jeff?
Right. So the first one we kind of looked at was climate in general. Climate's a huge issue for us. So number one was, are there ways we could do better carbon capture? So we're looking at ways to accelerate the discovery of materials that could capture CO2 when it gets emitted, and maybe even then reapply that to things like making new plastics or something. On the other hand, we also know that we use a lot of energy and carbon when we're just trying to feed people, just growing food on the planet, particularly producing fertilizer. Could we find a more energy efficient way to make fertilizer by basically doing what some plants do and fixing nitrogen? So simulating nature to actually make a more sustainable growth mechanism. We also use a lot of batteries in this world, particularly with renewable energy for solar and for electric cars, making those batteries themselves sustainable. Can we find different materials, remove the heavy metals to make those a more environmentally friendly technology? And maybe closer to IBM's business, we have computer chips all over now. Everything we use has a computer chip in it. Can we find ways to make the manufacturing and materials for computer chips more sustainable and earth-friendly?
These are, can I just say, these are all big initiatives. Like the battery thing, I think alone, right? You know, we all want to move to EVs. We want to, you know, but those batteries present a problem. We've got to figure these out. None of these are easy initiatives, or are they?
No, that's exactly right. All of these require a lot of ingenuity, not just new materials, but then how you integrate them. But for batteries, for example, we went after trying to remove heavy metals, cobalt and nickel from the battery. And in the process, we found we actually made a battery that was actually somewhat safer. It didn't have the flammability issues and still had good power density, good energy density, and fast charging. So sometimes by doing good, you actually end up doing better than you thought.
So, Jeff, what's one thing that you guys are working on that, you know, someone listening here over the next few years is going to have in their home or in their office, or they're going to be putting to use to make a meaningful difference, you know, sort of a meaningful small difference, but then collectively it really changes the equation?
I think actually the one that's the biggest on that is things like the computer chips, right? So we really do, we don't think about them, but every time you buy electronics, the process that went into making those is quite energy intensive and environmentally impactful. If we can improve that, every time you buy something, you can feel better about the fact that you aren't necessarily having the impact on the climate as you used to.
Interesting. Interesting. What's the hardest thing that you're working on?
I think the hardest one right now is the attack for COVID. Right now, we're trying to use accelerated materials discovery and chemical discovery to find treatments or vaccines to help the scientific community on this. That one is very difficult, but it's also the one that's most urgent. So I think pulling this all together and offering tools out can hopefully make a big difference in the next year, not 5 years.
Yeah, it's interesting. I mean, we were talking with a doctor earlier in the show about how, you know, these are these moments where we can make some real technological advances and structural advances in medicine that could really radically change not just how we do things, but the access to the best technology and ultimately the access to the best healthcare. I would imagine that companies like yours have to be integrally involved in all of that.
We absolutely are trying to be. I think it's key to get the access everywhere, right? It can't just be something that's available in the U.S. and Europe. And that also includes also the science that's being done. So we do a lot of work right now with robotic kinds of chemical simulations to try and do some of this so we can move between labs more easily. And that hopefully also accelerates the development time.
All right, we're going to leave it there. Thank you so much. Dr. Jeff Welser, Vice President, IBM Research, joining us on the phone from California. We know, even from the work that we've done around the U.S. Open with IBM, you know, AI, the applications, and the sort of deep technology, Watson, et cetera, it all plays into more parts of our lives than maybe we think about, Carol.
But I think it is good to have kind of a plan and think about some core technologies that are increasingly taking up our world because, you know, they solve some problems but create some new. So we have to figure out how to do it in a sustainable way that doesn't, you know, create another footprint on our climate. So
well, and your point about the EVs is dead on because I think people do worry a lot about, or they should worry more than we probably do about, like, hey, I'm saving the planet, I'm driving an electric car. It's like, yeah, but what about that battery, bro?
Yeah. We got some problems.
Yeah.
All right. Good to talk about that. For those of you listening in New York and San Francisco, watching on YouTube, Bloomberg Business Week, Jason and I, we're going to continue. If you are listening, though, on Bloomberg 99.1 in D.C., Sound On with Kevin Cirilli is next. Not like they have much to talk about in the world of politics.
No, it's fine. Everything's fine. Election coming up, but yeah, going all according to plan. Yeah, no, I don't even know. It's going to be a very boring show.
Hey, but listen, on our show, man, we have one of our favorite people. Joe Nocera is coming up, Bloomberg opinion columnist. He's going to talk about college athletes. He's going to talk about the world.
Can't wait.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 1061. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Can I just say, we have Texas relatives, and they used to come and visit and live with us, for a few days or a week every summer. And like when they were coming, we would be so excited. It's kind of how I feel right now.
I cannot
Bet our
wait
next guest.
to get Joe Nocera on the line and just break it down. So much sports to talk with him about, the world. He's got some takes. He always does. We're going to get to him in just a second. But first, let's catch back up with Charlie Pellet. Hey, Charlie.
Well, hello there. Can't wait for Joe Nocera. We've got the Dow, the S&P, NASDAQ all higher today. What a session. Stocks were whipsawed as investors weighed the chances of a compromise on a new stimulus package amid concern over an uptick in global coronavirus cases. Here are the closing numbers. S&P up 9. Again, there are 0.3%, still positive on the year in the YTD column on the Bloomberg, up by 0.5%. The Dow up 52 points today, up by 0.2%. NASDAQ up 39. That was a gain of 0.4%. Well, as for the market outlook, David Kostin is chief strategist at Goldman Sachs. And on Bloomberg Television this morning, he told us he is sticking by his year-end target for the S&P 500 index.
3,600 is a target for end of the year, 3,800 middle of next year. And the argument I said at the very beginning, ultimately this is a medical situation, medical challenge for the economy, for society, and ultimately for the equity markets. And I pointed out that the level of the market at the broad level has really been trading pretty carefully, pretty closely with the probability of a vaccine being introduced.
10-year up 2/30 seconds with a yield of 0.66%. Gold up 0.4%, 18.70 the ounce. West Texas Intermediate crude up 0.7%, 40.19 a barrel. After the bell, we heard from Costco. Costco reporting revenue for the fourth quarter that was 1.8% above the average estimate. Fourth quarter revenue, $53.88 billion. Estimates there, $52.46 billion. Costco shares, they're slumping after hours, down now by 3.46%. AT&T is extending its media rights deal with Major League Baseball, agreeing to pay a significant premium to continue airing the sport on its cable channel TBS. AT&T shares up now by 0.6%. And Nikola shares tumbled again today after the electric vehicle startup got its first cell equivalent rating. Wedbush analyst Dan Ives citing the loss of a driving force in its company's founder's departure and the threat posed to hydrogen fuel's appeal by Tesla's, quote, eye-popping battery innovations. Nikola lower today by 9.7%. Recapping S&P up 0.3. I'm Charlie Pellet. Bring on Joe Nocera. That's a Bloomberg Business Flash.
Bring him on.
All right, Charlie Pellet, thank you so much. Well, let's get into it. Joe Nocera, he's a columnist for Bloomberg Opinion. He's an author. He's a podcaster. We're going to talk about it all. If you're driving, pull over. If you're sitting at your desk, stop looking at TikTok and listen to Joe Nocera. He joins us from Southampton,
Those of you
New
playing
York.
games.
It doesn't feel so popular amongst our life.
So, Joe, we loved catching up with you, and as the college sports season has gotten underway, I knew you would have a take, and here it is, available on Bloomberg Opinion and Bloomberg.com. This has laid bare so many things. Tell us about college athletics right now.
Well, how would you view football players right now at this moment? I view them as essential employees. It's like meat packers and grocery store workers, right? Because they're feeding $1 billion industry at a time when other students are being sent home because of COVID, when kids are learning remotely. The football players are all on campus because they have to be. And, they'll say that they want to play. Of course they want to play. It's not the role of 18, 19-year-olds to make that decision. It's the role of adults. And the adults want to play because there's so much money at stake. It's that simple.
So, Joe, we're having a little trouble with your connection, which really bums us out because we really want to talk to you. So hopefully, I think our guys are going to maybe try and call you again and see if we can get a cleaner line because we want to be able to share clearly your views here with our listeners. So we're going to hopefully come back to Joe Nocera. Listen, phone lines and stuff in this virtual world, it's a little tough sometimes. And it depends on where you are.
And listen, the point that he was making about college athletes, it really has been laid bare, as I was saying, because you have had a huge amount of economic pressure put on these schools and ultimately put on these teams and put on these athletes to perform, even as some students aren't coming back. You had the Big Ten football teams as a conference essentially forced to play, sort of forced to reverse a decision. They were going to, they had announced they were canceling their season. But then when the SEC, the ACC, and others, including the Big 12, they said, nope, we're going to play. All of a sudden, there was pressure, including from the President of the United States, by the way, as I'm sure you saw, Carol, to get back on the field.
If
And
I
they're coming
may,
back.
it's not a table read, but let's just do this. Joe writes in his column, he talked about it, over the summers, everybody was debating what to do about bringing students back to colleges, student athletes back. He writes, would they dare bring football players to an otherwise empty campus? Wouldn't that destroy once and for all any remaining argument that athletes were merely ordinary students who played football for the love of the game, which is the rationale for not paying them?
Right.
I mean, it's just brilliant. Like, if you think about it, if it's not that important, but as you just said and you laid out, Jason, we realize we've done the numbers. We've talked about how important, these college teams are for colleges and universities, directly to them as well as the surrounding areas.
Well, and it's interesting, too, on the subject of players, and I'll do a shameless tease for our Bloomberg Business of Sports podcast a few weeks ago, and I've mentioned this on this program before. We had Amani Toomer, well-known New York Giant, of course, won a couple of Super Bowls with the Giants. He played at the University of Michigan, and he pointed out on our podcast that when he played at the University of Michigan, his coach got paid $500,000 by Nike. He got Zippo. So, Joe Nocera, is this going to change? Do you think this is the time when this is going to change, that athletes are going to get paid?
Before we get to that, I just want to say for the record that you would think that in the Hamptons you can get decent cell service.
We were thinking it. We're so glad you said it.
Yeah. So it's one of the weird things about the Hamptons. Cell service sucks. Anyway, I kind of wish there was an antitrust suit going on right about now, because the evidence that the players they're actually employees has never been more powerful, and all the old arguments just fall by the wayside. They just fall by the wayside. Now, there have been there was a congressional hearing actually right around the same time the Big Ten said it was coming back to play football, and some of the senators are very, very tough on this issue, and the Republicans are kind of saying, well, we don't want to regulate college football. But they don't have to regulate college football. All they have to do is pass a law that says college athletes have the right to be treated the same as everybody else.
Yeah.
That's all they have to do.
It's very simple. It's very simple. All right,
right.
Joe, hold that thought. We're going to do some news. We've got we've got a big chunk of time, a nice chunk of time, that we're going to dig into this with you a little more. We're talking to Joe Nocera, columnist for Bloomberg Opinion. He's also the author of a book that is incredibly timely, and he wrote it before this was even in front of us, Indentured, the inside story of the rebellion against the NCAA. We're going to get back to Joe in just a couple minutes. First, let's get to Ed Baxter. He's in San Francisco. Hey, Ed.
Hey, thank you, Mr. Kelly. President Donald Trump has repeated again today, we will see this with respect to the election.
We want to make sure the election is honest, and I'm not sure that it can be. I don't know that it can be with this whole situation. Unsolicited ballots. They're unsolicited, millions being sent to everybody, and we'll see.
Now, even with that backdrop of Senate Majority Leader Mitch McConnell saying there will be a safe, orderly transition of power, he has tweeted the winner of the November 3rd election will be inaugurated on January 20th. Democrats have responded to all of this. House Speaker Nancy Pelosi.
You are not in North Korea. You are not in Turkey. You are not in Russia, Mr. President. You are not in Saudi Arabia. You are in the United States of America. It is a democracy.
Police in Louisville say a suspect has been taken into custody in connection with the shooting of 2 police officers.
Lorenzo Johnson has been charged with 2 counts of assault to first degree and 14 counts of wanton endangerment, all directed against police officers.
And FBI Director Christopher Wray, addressing the Senate today, says his agency is indeed looking to investigate demonstrators and demonstrations involved in criminal activity.
When the ideology leads someone to commit criminal acts and pursue violence, the FBI will not hesitate to take appropriate action.
And he says those involved in extremist groups. New York Governor Andrew Cuomo says he wants the state to be able to make sure of the efficacy and the safety of any vaccine that the federal government clears for use. He says he doesn't trust the federal government right now with the health of New York State's residents. In San Francisco, I'm Ed Baxter. This is Bloomberg Radio.
All right, we're going to get back to our conversation in just a minute with Joe Knows Sarah, but I'm just going to take this time, Carol. I'm going to hijack this little
see what you're
part of the
doing
program.
here.
See what I'm doing?
Yeah.
I'm just going to shamelessly promote an interview that I'm very excited about, and I think you will be too, because you know this guy. He's been on this program.
I've talked with him. Yeah,
Steve Paliuca. He is a well-known private equity executive in Boston, but better known to many in the Boston area, especially sports fans, as the managing partner of the Boston Celtics.
Yeah,
we
absolutely.
talked to him in the bubble. He's in the bubble.
He's in the bubble. How's that going?
Very interesting. He actually breaks down over the course of this conversation, which will begin airing tomorrow night on Bloomberg Radio, and you'll be able to get on podcast as well, Bloomberg Business of Sports. He talks about all the protocols before you go, once you get there, what it's like. Because he's in, to be fair, the secondary bubble. So there's like a bubble, and then there's a secondary bubble. So he and the other owners, family members, et cetera, can essentially be on the other side of the glass, literally, from the players. And so he can't have any direct interaction with the coach who works for him and the players and things like that.
It's like going to a hospital and looking at all the babies.
Yeah, exactly. Are you calling the players babies?
And sometimes they are.
Sometimes they are. But he did talk about the quality of the product. He talked about, sort of what they've learned. But really interesting to get a sense
It's going well,
from
right?
him. It's going great. It's going great. It's not going so great for the Celtics right at this moment. They went down 3-1 to the Heat.
People staying safe and healthy.
Exactly. No positive tests. They've had a couple people they've had to kick out of the bubble, a couple players, but they've kept it on the rails. And one of the things we get into is what happens for the next season, which is probably going to start in January. So he's part of those discussions.
Yeah.
He is a very well-established owner and very popular in Boston, I must say.
He's a nice guy. You've talked to
a nice
him.
guy.
I've talked to him. He's just a nice guy. And there's just so much of the world you can see with him. But my guess is for January, they're going to have to do the same thing.
Feels like that's possible. Yeah.
Right?
They
And they've
want to
got
be
the
able to play
playbook
in
now.
fans.
They know how to do this.
They do. They do. More with Joe Knows Sarah. He's got the playbook for college sports. We'll get back to him in just a second. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. 2% drop in Costco wholesale shares after hours, after the company gave details about the cost of protecting shoppers, part of the double-edged COVID-19 pandemic that has brought big box retailers added expenses to go along with booming sales. But again, Costco shares after earnings down now by roughly 2%. Turned out to be an up day. Stocks were whipsawed, though, a volatile session as investors weighed the chances of a compromise on a new stimulus package amid concern over an uptick in global coronavirus cases. S&P up 9, a gain there of 0.3%. The Dow up 52, up 0.2. NASDAQ up 39, that was a gain of 0.3%. 10-year up 1/32 with a yield of 0.66%. Gold up 0.3%. 18.68 the ounce. West Texas Intermediate crude up 0.7% at $40.20 a barrel. Again, recapping here, equities higher. S&P up 9, a gain there of 0.3%. Let's bring him back, Joe Nacera. That's the Bloomberg Business Flash.
Let's do it. Thank you so much, Charlie. We appreciate that. Joe Nacera, Bloomberg opinion columnist, on the phone from Southampton. So, Joe, we're talking about college athletes getting paid. Before we branch out our discussion, so what needs to be done, immediately? What do you think, we need to see in terms of compensating all of these college athletes?
Well, I don't think anything's going to happen immediately. Okay. I do think, the next thing that's going to happen is, I believe tomorrow, the Pac-12, which is the last of the Power 5 conferences, is going to decide whether or not to play football. And, the chances are very, very high that they will play now that the Big Ten is also in. So now you'll have basically all the powerhouse teams in the country playing football. You'll notice also that I believe Notre Dame's game this weekend has been canceled or postponed because of COVID. And, that's the other thing that's going to keep happening is that as players get COVID, the teams are going to have to be on the sideline. The players are going to be isolated, and it's just this constant reminder that football players are taking risks that no other student is being asked to take. So it's yet another way where athletes are discriminated against or taken advantage of, you might say. And then we're going to have basketball season, and it's going to be kind of more of the same. Empty stadiums. They won't be able to play in a bubble, unlike the NBA. And what I wrote in my column is that you get. I feel like we're at an inflection point, and it kind of reminds me. And don't laugh. It reminds me a little bit of gay marriage. Because, for years and years and years and years, the majority of the country was against it. And nothing ever happened. And as we got closer and closer and closer to now, people started to realize that it was fundamentally unfair not to allow gay people to marry. Mm-hmm. And I feel like the same thing's happening here. When I started in on this 10 years ago, I was an outlier. I was a total outlier. And then the sports writing community got involved, and then professional athletes started to talk about it, and then more and more people started to take the position, started to see how this was unfair, and finally, the guy I wrote about in my column, he was the former, head of the Board of Regents for the University of Michigan, who writes a letter to the New York Times saying, "Pay the players."
Right.
I mean, to me, that's a tipping point. If a guy like that is saying it, that's a tipping point.
And
yeah.
Well, I was going to say, Joe, I'm glad you mentioned professional athletes because I was saying when we were reconnecting with you that Amani Toomer was on our podcast